sounds like my youngest daughter's cough. Gross. Second channel. Mic check. Check 1, 2, mic check. This thing live or no? Have to do save mic check 1, 2. Hello. I don't know what's going on. My voice is hey, good morning. How's everybody doing out there? Good to see you. We have a lot to go over this morning. American Airlines looking really nice. We had a private stream yesterday morning discussing American Airlines versus AMD. AMD up this morning, but they had a pretty bad day yesterday. AMD reminding me of something that I haven't thought about for a year. This is when CNBS likes to dump and unload beginning of the year on unsuspecting retailers. GS had an AI basket, 4-phase AI basket for 2025. They released that early December and then proceeded to unload on retailers, though a lot of those stocks look ready to buy now. Also, hold on here. I was able to get inside some Bloomberg terminal chats. It was not ironic, just talk about, hold on here. There was talk yesterday, or not yesterday, but end of year, not wanting to risk profit heading into the new year. And take the money and run, kind of a deference from Wall Street as the reason why we sold and did not have a holiday rally that it was geared towards. Take the money and run on such a great year. I can't blame them for that. And even for myself, I've been yesterday I went down to my local Fidelity branch and I was looking at my last 2-year returns, and the discussion centered around not wanting to give back all of those gains over the next year or two. So this morning yesterday we had PPI data that came in. That data was narrated as positive. The response was positive. Now, we were down at the bottom of range. The last 2 days we were down bottom of range. The next trip below that, though, there's not much there. There's a stop at 70, which would have just mechanical buying, like on 0s and 5 mechanical buying. The next real support is at 61, 62. Unless those reports come in super hot, do we go down that many points? We were counting it yesterday. I think it was 1.5, 1.5%, and then another 2% to get down to the other. So 3.5% drop, 4% drop, something insane like that on CPI or PPI. Those numbers would need to be really hot. Now, even though PPI yesterday was hot, right? And it was spun as not being hot, it wasn't hot enough where it matters at this moment. We talk here often about multiple data points, and even in one data point, it takes multiple months to make a trend. And even when you're in that trend, you're not the top of that trend or the bottom of that trend. And that the yield curve is like that right now too. We've got a bear steepener going on. It's not really a bear steepener yet. It's not negative yet. Now, you can be heading into some data becoming negative, but along that path, it's not necessarily negative on the market. So PPI was high yesterday. CPI data came out this morning. And we have retail sales tomorrow, and then everyone looks forward to the inauguration this weekend and the market being closed on Monday and Martin Luther King Day. Outside of that, there is some risk still. We're going to take a quick look here. There is still risk for a greater or deeper correction. I'm not on board that trade, but we have to... like we talked yesterday, we had a private stream yesterday. We talked about early bull cycle being easier than late bull cycle, and within here, like the first 2 years, it's pretty easy, right? You can follow all the tools that like if you have your own toolbox as a trader. A lot of traders either stop using those tools or they become complacent using those tools while we are in the start of a new bull cycle, right? And so by the time we get, myself included, so by the time we get to a more difficult time period, we begin to give money back to the markets with that complacency when we should be practicing those things, of course, in the beginning of a bull cycle so that we have them ready to go for when things become more difficult. And this market should become more difficult as time passes, either through range expansion, through volatility, or just not even participation like there is in the beginning of a bull market. Everybody looks like a great trader at a major bottom, right? We've mostly capitulated every stock in the stock market. Doesn't matter what you pick. You might pick a loser, but if you pick a loser in the bottom of a stock market, you are like 1%. All stocks rise, right? As we get late cycle bull market, it becomes easier to misjudge or mispick specific stocks, let's say, right, or specific issues, as stocks are rotated into to top them out, right, where others are left behind at that late bull cycle, late bull cycle. So things get more difficult as we move forward here. So in that discussion yesterday, we were talking about American Airlines versus AMD. AMD is up this morning, which I don't think that it won't be up, but are we picking AMD or AAL and the potential for gains? Are we going up 1, 2, 3, 400, 500%? Are we going to go back to retest all-time highs or not? Matters, right? It does matter. Is AMD going to trade 180? Or where AAL can probably trade from $10-15 to $80, up another 400%. So we got to be very selective as we head into this new year in our picks. Now, this morning, we need to talk about a few things here. When coming back into fundamentals, technicals, gamma, Elliott wave, fair value gap, whatever the fuck it is you do out there, traditional charting. Whatever it is you're doing, we're going to take a quick look here. This is SPY. First time breaking above. Let's just get rid of all this here. We'll do this together. So, you have the daily trigger here. We had the first initial drop down. This was the 18th. You were given a chance to get out just after the 18th. Actually stayed and streamed with you until we recovered, so that you could make a choice as to what you wanted to do. Went on vacation, right? Everybody goes on vacation, starts to move back to the downside. Now, there's some key points about all of this here. We did not get a second holiday rally, right? We're looking for like 2 or 3 holiday rallies. We got one early for Thanksgiving, Christmas. Got this nice. Now we got this one right here. We got this one right here. These are both great. We wanted one more, right? Just one more. Through Christmas into January, and possibly even one for the inauguration. We haven't received either of those, have we? But here's something fascinating, which is sorry, we had a private stream all day long yesterday. But if you look at price right here on the 18th of December, we had this initial move down right here, right, and a little bit more wick down below. We had this recovery, and since then, there hasn't been much movement, has there? This chart looks a little bit more bearish than other charts. Like, charts can really tell a lie for what reality is. I want to show you that really quick if I can, too. How charts lie. There's a bunch of different ways that charts can lie, by the way. Not just one way. There's multiple ways that charts can lie or look worse than they actually are. And then also the cheapening. Oftentimes you'll see someone say something like the cheapening of like the dollar, let's say, or goods and services over time. Let me get rid of this. So like you'll see someone grab you'll see people draw things like, I don't know, like a trend over a few years, and they'll say, "Oh, we're at the top of this trend going back to 1928." What they don't tell you is that we break out of those upper trends constantly. You can see it in countries that are like third world countries. They just go vertical at some point and start breaking up into the right, and that's because, of course, the cheapening of their currency, right, or even goods and services, all that kind of stuff combined. So charts can lie, and I want to show you one chart in particular here. Let me see if this helps here. So get this one going. The reason I'm bringing this up, I brought this up yesterday, which was, come on now, just give me a fucking chart. Hold on there. Here's an example here. Get rid of this. Sorry about that. Hold on. Now, when you look at this chart right here, this is the initial drop, right? This chart doesn't look so bad, does it here? Unlike maybe the trading view chart. We're like this is like nothing's really changed, has it? It's like kind of sideways, isn't it? It's not so vertical to the downside. And so we had the December 18th, we had this initial drawdown right here, right? One day, no one said at all, "Hey, this is a major correction." I didn't hear that anywhere. But then, of course, over the next couple of weeks, every asshole and bear out there came out and spun doom on you. Fucking bear steepener this, yield that, curve this. Inverted that, uninverted this, duration. They did that for like 2-3 years, right? About the inversion, duration. And you heard it all, right? Bond vigilantes, top of the stock market. They called the top of the fucking stock market back in November. I don't forget this shit. They were calling the top of the stock market here, then they came back. These are like accounts with like 500,000 followers, million fucking followers. And I got another guy called this one, and that's the top again, bro. And I just saw a bunch of like YouTube videos. I don't normally watch or even see YouTube videos about finance. I happened to come up because I was researching changes to TradingView for the year, and then later that night, my YouTube algorithm was like, here's a bunch of fucking stock market videos. And of course, all I see is like prepare for deeper corrections in the stock market. And I'm like, wait a minute. We're right where we fucking were right here. Like back here. Like we had you didn't call that a mega correction there. And then you're like, this is a mega correction. And we're now going to, do all that nonsense over there. We can, but nothing has changed since December 18th. We're in a zone, right? Bing, 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 bing. We have not broken out of that zone at all. Nothing has changed. right? It's important to know that, right? Nothing has changed. Nothing has changed. Now, we do have a problem here. We do have a problem here, and I'm not gonna candy coat all of this for you. Say, look, everything is awesome now. Hindsight 2020 trading. We still have an issue here. Let me see if I can show you this here. Am I on the right? I don't know why these things don't come up sometimes. Velo. There we go. They get all squished down. And there's a couple things here. So daily velocity, this isn't so bad. I like to buy daily velocity in a negative. But we still don't have higher lows on daily velocity. The real problem here, though, is not daily velocity. The real problem here is weekly velocity. So we can have a great not intraday, but intra-week day, right? This is the one that's a problem right now, which is this orange trend. This is a weekly trend, and it's turning down right now. It hasn't quite finished. We can be done here, but if this continues to go down, you want to be watching weekly closing price the next week or two in case it turns up. But if it starts to turn down, this can lead. They start getting like bad Friday closes, and we've got expiration and OpEx coming up this Friday. And we have a short week next week, so you don't want to be seeing like the continuation to the downside here on weekly velocity, even if we have good days within that week, right? The weekly closes are going to matter here for bulls. So, is there any more risk to the downside here? There is. There is some small risk right now of selling down just slightly below here, like 570 and possibly 61. Keep these on your radar. Don't get too bulled up at this moment. There's still a little bit more room to go down here. Weekly velocity says the same thing, that we could get that little bit more capitulation down there before we're actually done. So be aware of that. And as a bull, I want you to think about, more importantly, what I want you to think about as a bull is remember that the first 2 years, things are easy, right? Bad traders look good, myself included. You buy a dip, any pullback, any correction, it is eventually going to turn around and make you money, right? You put enough time on your trade, make it a call spread or something, and you get a pullback to the daily trigger, it's going to come back. Month and a half, 2-3 months, does not fucking matter. You can put a fucking 3-month call out in those first 2 years, easy peasy. You're going to make money. It's a no-brainer. Make a mistake, mistime it, doesn't fucking matter. Generally speaking, you're going to win 9 out of 10 trades. We're not expecting that for 2025, are we? We're expecting a little bit more range expansion, and we're some volatility. PPI and CPI saying that right now doesn't matter today, but down the road it will begin to matter. We'll look at some of those data points today, but it's implying, hey, look, like that bear steepener is not a bear steepener yet. This is the bear steepener, and this is the bull, and we have like the steepener in the curve. That's not bearish yet, right? Same with inflation, same with unemployment. It can go up and down, up and down, up and down as long as they don't get velocity. There is a window, right? The soft landing-ish window. And there's a part of inflation where we're not going to get a rate hike just yet. Although I do think that we get one. And we're going to talk about that too, because the WAPO put out a real shitbag article. We're going to read that article to you today. But I want you to focus on your rules, okay? Like this is the key here, is that as we stay in 2025, focus on your rules. Remember, you need to really focus on like your fundamentals, your technicals, your toolbox as we move forward. So, saying that, let's look here at when we recover off of the daily. So here's a daily trigger. Oh, wait a minute, bring this up. Come on. So we broke below the daily trigger, right? We traded below and towards the weekly trigger. when we trade higher back into the daily trigger, we are looking for a successful back test of the hourly and daily trigger for continuation higher. So let's look at one. Let's look at two examples of a successful back test and a failure, right? We trade above the daily trigger, come back down to retest it successfully. Woohoo, we're out of here. Right? This one we come down to back test and we fail, right? Come back up again to back test to continue higher. And what do? We fail, right? Bam, to the downside, right? Same thing, try to recover, bam, to the downside. And we're trying to get back right now above the daily trigger. And we already know that if you're just traditional charting, you already know that there's sellers up here, right? They're hiding here, right? Send you down, send you down, send you down. You know they're waiting here again, right? It's like, hey, it worked once, worked twice, worked 3 times. Can I get one more out of this? Can I sell this? Can I sell this down just one more time, right? Meanwhile, bulls this morning are ecstatic, joyful, happy, correction over, and they're just like, I'm long, and then boom, they come in. And even if we recover up here, they're long in the wrong places. Auto sell this. Even if we recover, you know they're going to be in here auto selling this. They're going to step right in, right, and make that attempt. So you want to be watching this move higher for those sellers to step in. And you want to be kind of hands-off in here, don't you? You don't need to be in here fucking around, do you? Oh, I'm long. I just got long cap. I'm finally bullish. I'm getting long. Oh, shit. They fucking sold me down, right? Burning on fire. Or I broke out cap. Look at that. So you were right once, but wrong 1, 2, 3 times. That's a 25% win rate. You actually suck. You're probably going to be, you're like a one and done winner in here, right? You broke out. You finally broke out. Cap, it's got to eventually break out. Sure. But if you follow your rules, you would have won or preserved capital these 3 other times. You missed this one. Let's say it goes higher, then finally comes back, and you're like Johnny on the spot. You start to see it bounce, and you're like, I'm going to get long with stops underneath now, right? Every situation normal, back up and to the right again. Woohoo, we're heading higher. Awesome sauce. So be following your rules in here. Truthfully, be following your rules in here. And I'm going to show you where those targets are lower in case we do make that jump to the downside. So let's take a quick look at that really quick. And so remember that, right? Get the squeeze higher. We don't want to get caught in a liquidity grab to send ourselves lower. You don't need all this money up here or this money. You could possibly stay long until just before, right? We break above the daily trigger, back test it with the hourly trigger. One more stab to the upside. But don't be caught up in here. Even if we break above it, don't be caught up here. Stick with your rules. I assure you, if you don't stick with your rules as the market continues on over the next year or two, you're going to slowly just give money back. Just give money back. Just give money back. Just give money back. And you're going to be hindsight trading in a year or two saying, fuck. You know, in hindsight, look at what I was doing. I didn't fucking care. Every time we hit that daily, we just kept moving. And all of a sudden we're not anymore. It's harder. It's more difficult. So, and that weekly trigger is saying, or the weekly velocity is saying that this is definitely still possible, right? That weekly close and a velocity on Friday, this would make that or show that continuation of velo on a weekly basis going lower. So there's still risk in here, at least from a weekly velocity perspective. Now, there is some positive here. The daily trigger is attempting to turn higher. That's always good to see. It's flattening right now. That's bullish, and that looks really good. And we're going to now look at a monthly basis here really quick. You should be doing this every morning at home, right? When you wake up in the morning, checking you're starting at a monthly basis, weekly basis, daily basis, 4-hour basis, 1-hour basis, down to whatever it is you trade. 15-minute, 1 minute, 5 minute, 30-second. We have traders that trade like fucking 5-second charts and shit like that, right? On futures and stuff like that. So we're going to look at the monthly basis here. And most importantly is this bar, this fair value gap down below. And we're going to take a peek at this one right here. Bam. It's a 562.07 moving up. It looks good. We like to see that. Make that, is that green? No, that's not quite green. It's like bluish. Make that green right there, right? 562.07. Hang tight, I'm losing my voice. We're going to go to a weekly basis next. Let's give this a second here to kick in. We got this little weekly down below. You see this right here? And I don't like, see this weekly turning over? See this weekly? See this weekly line right here? This is not what I like to see. This is the market losing momentum on a weekly basis. Very suspect here. Not confirmed, but it doesn't look good. I don't like that sideways action on a weekly basis. So we're gonna snap another line down below here. Bam, right? Did I not write W and M on those things? Hold on here. Remember, a little M right there. And we're gonna do a little W right here. So bulls not out of the woods just yet. Not just yet, right? Nice weekly bar, right? This looks good here. All right, it's a beautiful weekly bar. Imagine if this were to turn red come Friday. This would be ugly, right? Retail sales come out, something bad happens, this turns red. Don't want to see that. I like seeing this weekly green candle here. It's gorgeous, beautiful. Daily basis, right? We got the weekly and monthly lows. On a daily basis, this is sexy. I like it. So we've got Momo coming up from down below here. Right? Nice daily green. Nice daily green. Nice daily green right there. Look at that. We're just above it right now, aren't we? So we got three nice daily bars here. Got one daily right there. Another one right here in the start of today. Right here. Right? We hold that? I don't think so, but this is really what you're looking to hold down here. This like 583, 586 on a weekly basis, what you're trying to hold. Let's look at a 4-hour basis here. Grab that and push that backwards. Push that backwards. Push that over there for a minute. Take a look right here. On a 4-hour basis, you've got a little bit more oomph and help right there. Got a 4 right there. Oh, no. No, we're not doing interval changes. Our time frame changes. 4 right there. That's not so bad down there. There's a little bit of, we take it all the way down to 78. 1-hour basis right here. See what we got going on. We got Sneaky Pete's down here. These are points of interest on an intraday basis. There's a 1 right there, and then there's a sneaky one way down here. For a painful sweep right here. That, I think this one was right there. We're going to come into a 30-minute basis. Let's go. All right, so 30-minute basis. We're going to look at velocity for intraday. And let's see how much more bull. Got a little bit more. Getting a little bit long in the tooth at an intraday basis. We might have a little bit more to go here, but you see we're getting a little bit. See right here? Got a little bit more we can possibly go to the upside, but you're going to be looking for an inflection period. Back testing here coming up. not too much longer from now. So let's bring this back down. Let's go to a 15-minute basis. A little bit more leg here. Not much, but a little bit more. 15-minute basis. Let's take a peek at this. Bring that over there. Bring this over here. We know that the big gym bros, the old gym bros that actually do leg day, they're up here, right? Old gym bros. Young gym bros that miss leg day like Chamath are down lower. Those guys are up here, right? Just waiting. Could even say they're even lower, maybe slightly lower than right here. We'll leave that up there for now. We're going to go to a 1 minute. I don't see anything on a 15-minute basis. Right in here is 587.50. He'd probably blow through that and hit right through here. And all these 15 minutes down here probably blow down there and hit that 1 hour. So we're not going to mark those 15 minutes out. There is some positive stuff here. We have the 1 and 5. Let's take a look at a few things here. Scrunch all that up so we can bring this back. Bring that over there. Bring this right here. And there's a few things I want you to be paying attention to here. So important things here. The hourly and half-hour trigger. The half-hour trigger is crossing right now. We had the squeeze off that cross already. Half-hour trigger is right here. Hourly trigger down below. If we begin to fail, you'll be looking to trade or backtest 585, maybe even 83. Okay, and we'll also close out that. Pre-markets squeeze. Clean all that stuff up. So just be aware of that. We're a little bit long in the tooth on intraday velo. I still think you can get a little bit more, maybe, but I wouldn't be caught long up there. Because they can roll this even right now off the daily trigger. Now let's look at a few other things that are important to today. If you're looking to, if you're like, hey Cap, when do I know how to sell this? I'll tell you that too. So if you don't know when to sell this, as long as price is above the 1 minute trigger, the way is higher, right? What you're also looking for is the 1 minute trigger. See how it's vertical right now? So it's still bullish. You start to see that 1 minute trigger turn sideways. Begin to see the 5 minute trigger turn sideways. Start getting like, maybe not, right? So you'll be looking for a cross that looks kind of like this. I'll show you exactly what it'll look like, okay? You'll see that 5 minute trigger will start to turn sideways. And you'll see the 1 minute trigger, right? Begin to turn sideways, right? You'll see price. Now, let's say it goes higher, and let's say it stops, right? You'll begin to see price break down in here. Hit Mr. Yen, right? The goat calls this the diddle in the middle, right? Consolidation. Don't want to get caught in any of this. You'd rather buy the breakout or sell the breakdown, right? And if you're using, if you're using, awesome. Hold on here. Hold on a second here. Okay, bring that back over. If you're using 1 and 5 minute triggers as predictive, right? And you begin to see this breakdown right here, and you begin to see this roll. And begin to see this 1 minute roll down. That's a bear plane, right? 1 and 5 minute bear plane. You start to lose that. You get the new low off this prior low right here. Squeezes up, right? Exhaustion by bulls. Boom, boom to the downside, right? So we're not there just yet, are we? We're not there. You're not seeing it yet. None of that's happened. So still bullish here to the upside. But pay very close attention to this 5 minute trigger, this 1 minute trigger. And price action as that price action unfolds, and you're going to be looking for. One other thing here. Open that up right there. R4 and R5 on an intraday basis. 599.04 is R5. R4 is 595.53. So right in here, right where we think those old gym bros are, right? For bulls, R4, R5 usually is an intraday. More often than not, is an intraday. We're done. For bears, and this is you start selling here, right? For bears, if we hit this in the downside, they can get 1-2 more days, right? Escalator up, elevator down, kind of stuff. But for bulls, this is very long in the tooth, unlike bears. So I just want you to know that that's there. Let's take a peek at this. Where we already at 10:30 yet? We already hit 10:30 right there. 10:30. Another note here too on we use time here as well. Oftentimes you'll see attempts to sell the market at 10:30 in the morning, and then if put mafia or vol control doesn't show up 1 o'clock in the afternoon. So keep these things in mind, like 10:30, 12 to 1 p.m. And wherever price is at those time frames. So pay particularly close attention to like the 10:30 hour, the attempt to sell, and then like 12:30, the attempt to sell, and wherever price may be, right? You see price up here at 10:30, or you see price up here at 12 p.m., 1 p.m., stuff like that. Start questioning if they're going to try to step in and run this stuff to the downside, and if they're successful or not. So we're going to leave this here for you, and then we're going to jump down to the so this is SPX gamma. We're going to look at the gamma profile as we are now inside of positive gamma, though we have not back tested gamma at this point. Big pot to fill over there. Big pot on the put side of things to fill. Small pot on the call side to fill. Oh, did I just miss something here? Hold on here. Hold on 1 second here. Let me just reload this really quick. Get that nice push higher. See this next leg down right here? We have local support. The put wall is, we traded down to the put wall yesterday on SPX Gamma. Now trading higher into resistance. I want you to see this right now where we are. Coming into resistance on SPX at 59.50. We're not quite there yet. But there is 32 million in SPX Gamma up here at 59.50. We're going to take a quick look at that on net Gamma and see what it looks like here. That's 59.70, 59.60, 59.45. And here's 59.50, right where my cursor is. Can I make this thing bigger? Can I make this bigger? Hold on here. Right here. 59.25, 59.30, 59.35, 59.45, 59.50. Minus 6.02. But there's some room here, isn't there? Let's see if I make this smaller. Jesus, this thing is huge. Trading right now, right here. Looks like we can still take out some more, isn't there? This kind of looks like the call wall up here. Let's take a look at what this target is, 59.70. So there's 59.70, a little bit of resistance. Then we got the ultimate target up here of 6,000. Let's look even higher. This looks like 6,000, 59.70. So let's take a peek at this. So we got this 59.50 up here, and then we've got 59.7. We can get that up there. We'll make this line for right now red. Let's call this resistance. Call this call wall for intraday stuff. Let's take a peek and see what that looks like. What do we got up here? That's where the old man sellers are. And it's just before we get there, right? See that? Just before we get there. So they're in here, actually. They're actually slightly lower than where those sellers are. So this is probably R4 on SPX. And you should expect some kind of like at a minimum, some kind of a push up, pull back up, and then watch out for that early sell this time. A little bit earlier than you'd expect. 5970 on SPX would be the one I'd be watching very closely. So let's go back to the main screen up here. Here's SPY. And we said the old Jim Burrows are up here. They're probably a little bit lower. Probably over here somewhere. We're now trading on SPX 59.49.68. Put a little tiny yellow line right there. We got to burn through all of these sellers right here. And then we know that the old Jim Bros are probably right here. A little bit lower. SPUS continues to squeeze higher. Now trading into 59.50, trying to eat up some of that supply. See if we can take a peek on Bookmap and see if this can tell us anything here. See if there's anything above. Bookmap not showing where those hidden sellers are, except for the ones right where we are. They're showing the ones currently, but not the ones higher. See if I can see anything above. They're up there. I assure you they're up there somewhere. They're right there. That's where they are. Right there. Right here. I think they're just sitting like right here. So pay close attention to that one. Huh. No smooth streaming on YouTube. Poor quality streaming on YouTube. Hold on a second here. Give me one quick second. Why is that? Give me one quick second. Excuse me. This is SPX Gamma trying to break above into that call wall. Trying to fix my streaming issues here. I'm getting notices that my streaming is poor. I saw Jedi Marcus this morning saying that he was going to buy Doom puts on the inauguration today. I don't think he was joking. He was kind of joking, but I don't think so. I don't think he's buying puts that are worth anything. I think he's probably buying like penny puts in case something were to go wrong. A little bit of rejection right now on that 592.89. Old Jim Bros slightly lower than we thought. That's where we make that line larger for you there so you can see it. we were saying yesterday that, or I was saying yesterday, JD Vance was, let's see you, Jimmy. JD Vance was making that commentary that he wanted to go to the national championship game rather than attend the inauguration. And there's like, it's like 11 a.m. to like 7 p.m. Plenty of time to get there to do both. The people were like, oh, he's just joking. He's, a fella. And I was like, yeah, I'd probably do that too. Separate those guys right now. YouTube is fine there. Thanks for saying something. I appreciate it. Yeah, I was getting notices saying that my stream quality was low. We're streaming today, I think, to like 5 different platforms. Okay, so we know where gamma is. We know where fair value gaps are. We know where the triggers are. We know where velocity is. Let's take a look at some Elliott wave now and see what the Elliott wave expectations are for this morning. Where the count is right now. We'll check everybody and see where everybody's at. Last night in your brief, I gave you some targets to the upside, an upside push to 94 and slightly higher, right? I gave you, if you read your market brief last night, I gave you a brief that had a target this morning of this 92, right? And then I had a pullback and then another push higher to about 94, slightly lower. I should rephrase that. Let's put this here. I had a target for you this morning of 92, and then a pullback, and then one more pump higher to 94, right about here. A 5-minute trigger is coming up to the daily trigger to help out. We'll see if that 5-minute trigger will give the support that we need to get slightly higher. Does anybody remember what we had in the report last night as to what happens afterwards? And that was a drawdown, right? What we'll do is we're going to rein in some of the expectations to the downside for now, because those expectations are down to 72, right? We're going to look at something. Let's go to the trigger screen here. We're going to look at where these buyers have been coming in. And you can see them, right? They're right here. They're right here. So these are where known buyers are, right? We know that the buyers came in, stepped in here. We know they were over here. We know that they were over here. And they're probably waiting over here somewhere, aren't they? Right? Or we expect them to. Right? We're making an assumption that they are slightly higher right now. So right here, look at that. Right where we thought they may be earlier. Make that smaller. Make that clear line right there. So let's take a peek. We've got all of this stuff right here, right? All down here. So you could theoretically say, or we'll move this over if this takes until 11:30, 12, 1 o'clock or something like that. We'll put that. Now let me see, right over there. Excuse me. Hold on here. Get rid of that. And kind of see that 1 minute trigger and that right over there, right? Ram. It's right over there. Ram. Something like that, something like that, and then we're bam off back and running again, right? We'll leave that right there. We're going to watch for this check back right here and see if this can hold to give us one more pump higher. You want us to draw that up there? We can. That makes you happy going up there. I'd prefer to see it 94, maybe 94 and a half. We'll draw this one with a dotted line. A little long in the tooth there. There we go. A quick second here. I got to check everything. I got someone contact me right now. PT1 right here. PT2. PT3. No guarantees on these. We want to watch this hold, right? Watch them kind of like liquidation break, get back up here, and then we start attacking that PT2 to PT3. Watch this consolidation very closely. What you don't want to see happen is price break below. Get caught in consolidation. Bam, bam, bam. You don't want to do any of that. You just want to wait, right? Get back above it. Then we take that trade right around there. The other thing you could do if you wanted to take this trade was to wait for the break above right here. If price can get above this prior high, you can jump back in for the trade right in there. Right there. Price still holding the 1 minute trigger. I'm going to read some stuff to you here. Give me a quick second here. We're going to talk about some PPI, CPI stuff. Price of eggs. Donald Trump. Well, a few things. So I was reading this. This guy like said it really well. He was like, you know, when Donald Trump runs for office, he makes outlandish claims. Then he reins all that stuff in once elected, right? Key personnel that or key positions here, like Besant and guys like that. He's putting in place that are favorable, at least early presidency, right? Try to extend this market. Wall Street was talking back in Wall Street. Bloomberg terminals were talking Biden to win until there was the debate. When he lost the debate, they immediately gave the election to Trump, rightfully so. Then when they flip-flopped and picked Harris had like 2 or 3 good weeks, and Wall Street flopped back and said, Harris is doing well. We've got her winning. The Kamala Harris trade is on. Now, when Harris came into the election, Wall Street gave 2 scenarios. They gave the Harris scenario and the Trump scenario. The Harris scenario, hold on here, what's going on? Crude inventories. The Harris scenario, or the Kamala Harris scenario and the Biden Harris scenario was that top of the market was likely going to be first of the year, and that their policies would likely usher in a recession sooner than later. Now, when Trump began to lead, this was in the summertime, very early summer, not even the election. Wall Street said, nope, she's lost the lead, and we're 100% sure that Trump's going to win. This was very early summer, believe it or not. And they began the Trump trade. Now, there's a few different Trump trades, but the one that you're thinking about, right? The one that you're thinking about, the individual issues that will help or that Trump will focus on, right? Like no EVs, we're going to do oil and gas drilling, drill, all that kind of stuff. So now when they chose Trump to win, right? They said Harris would usher in a recession earlier, but Trump likely won't. There'll be a window that's a little bit farther out in time. We do still think we're getting a recession, but not beginning of the year. And so that really led the charge about 7 months ago, saying we may have more market left with Trump in power in 2025. It seems like the market has been trading into that and expecting that trade in 2025. His inauguration here is coming up, and we've got the Trump promises versus the Trump reality, right? And the thumbnail on YouTube this morning was one of the things Trump said and promised, and then restated his thesis. He originally was like, and this is election stuff, right? Stumping stuff. You have Trump supporters saying or complaining, price of eggs are too high, the price of this is too high, the price of that's too high. I'm barely getting by, boss. And that's not the reality, though, is it? It wasn't the reality last summer, and the data didn't support any of that. The data supported that prices were higher, but that wages kept up with those higher prices. As a matter of fact, data taken as a whole in the consumer said that the consumer is great. They just don't want to pay higher prices. So if I used, as an example, if I was used to make $50,000 and eggs were $1, I'm now making $100,000 and eggs are $3. I'm not going to tell you that I'm making $100,000, but I'm still going to bitch about the eggs being $3. Get it? Understand? So the data for the consumer right now says they're better off than they were in pre-COVID, believe it or not. I know you don't believe that. Well, they're fudging the data cap. The truth is that's not the case. They're better off than they were even pre-COVID. As a matter of fact, the median income right now in the U.S. is $80,000. It is huge. And even the amount of people that are poor right now is shrinking, believe it or not, from the data. So as we come into the reality of things, Trump's saying, well, I know I promised you I was going to bring the price of eggs down, but I doubt that I really can do that. And that is the reality. He probably is not going to bring the price of eggs down. And inflation and unemployment and some other data points are saying, hey, unemployment's great. Jobs are good. People are working. We don't have lines of people walking down the street unemployed, as though we've been being told that during the entire election. Not really the case, is it? And inflation right now is still kind of good. Not so bad. But it is there is some inflation points in the background that are going to matter later this year into the end of the year. PPI that matters. And there's some policy things that Trump is dialing back that actually is likely going to help with some of that. Extend that PPI, like that positive PPI, positive CPI, maybe into the end of the year. Believe it or not, some of the stuff that Trump's saying, there's like a window, there's like a gray area here, right? Like I'm gonna tax this, I'm gonna tax every country 100%, right? And now he's dialing that back, right? And what's fascinating about that is tariffs in particular. Tariffs in particular. Like it's the art of negotiation from the book that he wrote back in the 80s and stuff. It's like, well, country A has 100% tariff on the United States. Does the U.S. have a 100% tariff on that country? No. We likely have none, or maybe 25%. So you have the saber rattling, and there's a small window in there where producers can make concessions, right? Where you actually don't eat it as a U.S. consumer, even though you can eventually eat that. There's like, we don't, like the dum-dums over in the U.S. that don't understand economics don't realize that we already have 100% tariff on U.S. Imports. Maybe we can make some concessions in the middle here, right? We'll eat a little bit of this on the back end, right? And maybe not pass that along to the U.S. buyer of goods, finished or unfinished. Here we go. A little bit of roll coming down here in S&P 500. So there's some window stuff in here, even though we're getting like PPI, believe it or not, was awful yesterday. But it didn't matter for today. It matters for like down the fucking road. And some of these Trump policies, I got to admit, I'm a Democrat. Some of those policies, the way he's dialing them back, I'm like, that might work for a little bit. Are we actually going to deport 20 million people this month, like we said we were going to do? Open up camps, and all of a sudden, Trump's own guy saying, no, we're just going to start with the illegals that have already been ordered to deport in court. And you're like, oh, okay, what's that number? That's about 1 million people. I'm like, Obama deported about 900,000 people and in 1 year, and nobody said a fucking word, and it didn't impact our economy at all. So I'm like, that's pretty good. Like, this guy could possibly, Trump could possibly, and with the picks that he has, there's a little bit of selling out to corporate America. So I'm like, there's a window here. Even if he does pass maybe one or two things that he promised on the campaign trail, you know who did that? Obama. They tied his hands by his second year in office. He got one thing passed. When he was like, I'm going to get all this shit passed, right? He goes down to the House of Reps, and they're like, fuck you. We're here for power and money, bro. We're going to do some dealing, right? And I want this for my people. You want this, I want that, right? And so it took, like, he got bogged down in making agreements. Now, as a voter or a supporter of Obama, his supporters never got anything. They got one thing, healthcare, right? But they were happy with that. So if you're a Trump supporter, if you don't get everything he promised and you get like one good thing that he said he was going to do, you might actually be happy. And you're like, no, I'm not going to be happy, Cap. That's probably not true. The psychology of you as a voter, regardless if you're a Trump supporter, I don't know, Biden supporter, fucking Carter supporter, Nixon supporter, Eisenhower, don't give a fuck. If he gets that one thing done for you, but maybe not all of them, there's like this window where the market and the economy and the business cycle might get a good extension into 2026, at least. Oh, yeah, look at that nice little back test right there. Let's see if we can break above it and start heading higher now. Look at how beautiful that is. Isn't that beautiful? Now, this is the last part of that test. See if we can break above here and get above that 1 minute trigger and continue on to the upside. Whew, getting back into things right now. Let's talk tariffs really quick. Love it. It's going to take a couple weeks to get back from vacation, isn't it? Making bad trades all over the place. And like fucking, it's like a fucking, like went on a fucking extended fucking sabbatical or something. We're going to talk two things right here. The first thing we're going to talk about is we did a bunch of this in a private stream yesterday. We talked about yield curves and threats and all the garbage you're consuming in all mass media. Like mass media fucking, like Washington Post put out some garbage this morning. We got to get into that too. I fucking like want to like tear my hair out. Like even the Washington Post, they put out this story about did Jerome Powell make a mistake cutting 100 BPS and more specifically the 50 BPS? And then this guy cited the late 90s, and I'm like, why aren't you telling them that the market fucking went vertical? So we'll talk about that later. But for the start here, let's talk about more specifically tariffs, because there's like two arguments on tariffs right now. We're not talking about tariff theory or economic theory. We're not going to talk about any of that stuff. But there's like, if you're not going to take the theory side, right, which is not reality, like on one real hard right side, real hard left side of economic theory, we're just talking like basic tariffs, right? And actual implementation of tariffs. Give me a second here. My throat is fucking murdering me right now. Hang tight 1 second here. The reality of implementation of tariffs is that some of them are good and some of them are bad. And if you look back when England, a long time ago, England used to run the world, right? UK used to run everything. And they went like hard right with their tariffs. where the U.S. was more in like this free trade liberal example of, oh, we're losing this right now. Hold on here. Buyers unable to get above. This is not good here. Don't want to see that. Way is likely down to the 5-minute trigger at least. Be very careful. This does not look good. I don't like seeing that rejection right there. So there's a time when England ruled the world, right? And they became very, but we haven't done this yet. There's been like threats of doing this, but we haven't done this. Like none of this is real. And that gave an opportunity for other countries, the U.S. And this was after the World Wars too. It was like an opportunity after the World Wars to be like, well, we can step in here and become the world leader in the economy, right? And free trade, baby, right? And it was really because World War I and World War II really did some damage to the UK, and they became very protectionist, right? And it opened the door for a new leader in the world economy. That was the U.S. Now, there are threats of that right now, but it's not the reality. There's like this middle ground. And right now, in truth, the United States is taken advantage of around the world. You've heard me say in the past, you guys know I'm a Democrat, and you guys have still heard me say in the past, I'm a nationalist when it comes to some of this shit. I don't like that the U.S. can't build a fucking ship. I don't fucking like that the U.S. can't build basic fucking chips. Like, not only that, we've lost generations of craftswomen, not just men, but women. And lots of craftswomen in World War II, right? But we've lost that. When I was a young kid, there was two things that I was told. One, I was told we're going to turn into a service industry. It would be the downfall of the U.S. That didn't happen. We turned into a service industry, but the U.S. kept growing. The second thing that they told me, though, was that we were going to lose the ability to do this stuff, and that would come to bite us in the ass. And that is true. You see the rise of China. It is crazy. It is dangerous. And it's very much like the U.S. was with England. And the U.S. built itself upon free trade. If you look at our trading partners around the world, it is lopsided. Lopsided. There are many nations around the world that have full 100% tariffs on the United States, in sometimes even more embargoes on the United States of America. So even though you hear the Trumpism, we're going to do this and we're going to do that, there is some negotiating room from a lot of these countries where they're like, yeah, we can give a little bit here. So I'm going to read some of this to you right now, okay? This is from Wolf Richter. The proposals by the incoming Trump administration to levy new and additional tariffs against China, Canada, Mexico, the EU, etc., have unleashed a torrent of anti-tariff nonsense in the media, pushed by globalization mongers, by corporate America perennially in search of cheap labor, and by foreign countries that have been riding the big U.S. gravy train. Now, some of the top appointees designate of the next Trump administration have pushed back against this anti-tariff nonsense, including Chairman Designate of the Council of Economic Advisors, Stephen Moran, who said, quote, in the real world, we have a one-sided free trade policy in which America isn't nearly as protectionist as other countries, end quote. And we'll get to them in a moment. The result of this one-sided free trade policy over the decades has been gigantic and ballooning U.S. trade deficit, exports minus imports. Exports add to GDP, imports subtract from GDP. Remember, we are a service-based economy right now, aren't we? And the trade deficit has always been a huge drag on GDP, in addition to causing all kinds of other issues, such as the strategically risky dependence of the U.S. supply chains, and thereby the economy on Chinese companies, many of them state-controlled. You know what the implication of that is, state-controlled? It means that I can subsidize, well, there's two things. In the U.S., I cannot tell Elon Musk, Mark Zuckerberg, Tim Apple, Bill Gates, you're all going to work on TikTok together. Oh, and by the way, Google subsidizing YouTube. Fuck it. We'll subsidize all of this TikTok thing. We don't care how much money you lose. We'll just print more and give it to you. Can't do that in the U.S. or any other free country, can we? Many of them state-controlled, right? So let's talk some basics about tariffs. Tariffs have two roles: raising taxes, which the U.S. desperately needs. And by the way, the 50 basis point cut raises long-term yields. That raises what? The price to buy a home and corporate borrowing rates. U.S. trading partner, number two, U.S. trading partners have used tariffs extensively to protect and support their own industries at the expense of U.S. production and exports. Number three, tariffs are applied to the cost for the importer. Listen to this closely here. Tariffs are applied to the cost for the importer. If a big U.S. retailer buys T-shirts by container loads from a factory in Bangladesh that intends to retail in the U.S. for $9.99 each, and if the tariff on this product is 25%, the importer, the retailer, is going to have to pay 25% in taxes on the cost from the factory. If the factory charges, this is the stuff right here, this is the stuff that no one ever wants to delve into. If the factory in Bangladesh charges $1 per T-shirt, the tariff amounts to 25 cents. Tariffs are a direct tax on the profit margins of foreign producers and U.S. importers. Whether or not they can charge more for their products without gutting their sales to pass on the tariffs is decided by the market. And if they can pass on a portion or all of the tariffs, it would be a one-time bump. Companies are already charging the maximum amount they can and still obtain their sales goals. If they raise prices to pass on the tariffs, sales may fall. Whether or not the retailer can raise the price of the T-shirts to $10.24 without pulling the rug out from under the desired sales volume is decided by the market. It's decided by the market, not the retailer, and the retailer may find that it has to eat the tariffs. These are the things that no one wants to say. Does the retailer eat some of those profits? Does the producer eat some of those costs? And there is a small gray area where they may be able to do that and not pass those along to you. And there's a small gray area where you may be able to eat some of that. And we know we still have what? Money sloshing around in our economy, don't we? So it's somewhat a little bit of QT, isn't it? To some extent. U.S. imports may negotiate the purchase price to where the foreign factory eats part of the tariff, in which case foreign producers pay the taxes to who? The U.S. government. Again, removing money from the system. Domestic production reduces transportation expenses. Loss of intellectual property, a huge issue in China, right? We know that some of what China does, coming back down here to test the 5-minute trigger, China loves destroying intellectual property, right? It's actually famous in China. It's actually not frowned upon. If you ever go to China, you get a lot of respect for recreating other people's work. Believe it or not, that's like a cultural thing, right? You'll find artists repainting classic works, and they're revered, even though it's not their own work in China. Hold on a second here. Supply chain uncertainty and lead times, catastrophic issues. Domestic production reduces transportation expenses, loss of intellectual property, a huge issue in China. Supply chain uncertainty and lead times, catastrophic issues during the pandemic. You do remember during the pandemic, right? And we had toilet paper shortages, right? We had gridlock in importing goods at our ports and other costs and risks. Tariffs tilt the balance further in favor of what? Domestic production. Foreign manufacturers can avoid tariffs by producing in the U.S. All major foreign automakers already manufacture vehicles in the U.S. In terms of U.S. content, Honda models are right behind Tesla on top of that list. Tariffs will further encourage U.S. production. including of components and assemblies. Many producers, right, PPI, right, many producers have cut prices in the U.S. over the past 2 years, either directly or through incentives to reach their sales goals, including automakers and home builders. In this environment, they will eat 100% of any tariffs because they cannot pass on any additional costs. Industrial robots cost about the same anywhere. Products can be and are manufactured in the U.S. priced competitively when advanced automation reduces the labor cost component. Tariffs add some pluses to that math. Whew. Now, what is Trump's economic team saying about tariffs? Top economic appointees designate of the incoming Trump administration have come out and discussed tariffs and trade policy. Chairman designate of the Council of Economic Advisors, Stephen Moran, is quoted as saying, "In the real world, we have a one-sided free trade policy in which America isn't nearly as protectionist as other countries. Trump's proposed tariffs could generate some $450 billion in revenue a year for the U.S. Isn't it better to tax foreign entities for entering the American market than impose new taxes on American families? We also need to target tariffs to lift such critical industries as what? Defense. The U.S. relies heavily on imports to make weapons and other material our military needs. This doesn't make sense." White House senior trade counselor designate Peter Navarro saying, "We put on significant tariffs on China, steel, aluminum, dishwashers, solar, a lot of increased countervailing duties to stop the dumping. In Trump's first administration, we had zero inflation from any of that. It never happened. It's the same movie this time. Inflation is a monetary phenomenon where we run a Federal Reserve that prints too much money, and they do that to accommodate fiscal irresponsibility." U.S. Trade Representative Jamieson Greer saying tariffs can help support U.S. manufacturing jobs in particular, especially to the extent that they're remediating an unfair trade practice. If you level out that playing field, not destroy it, we're not going to go crazy here and become protectionists. Just level it out more. It makes it so that Americans don't have to compete unfairly. Commerce Secretary Designate Howard Lutnick saying, "When you're running for office, you make listen to this closely here. Some of you MAGA people aren't going to like this, but if you take your MAGA hat off and you put your Wall Street hat on," and some Dems aren't going to like this either, right? Your Democrats and your MAGA probably aren't going to like this, but put on your Wall Street hat for a minute. Howard Lutnick, quote, "When you're running for office, you make broad statements so that people will understand you. Tariffs are an amazing tool for President Trump to use and prior presidents, right? We had Biden use tariffs. We've had every president in modern history has used tariffs, right? And he understands that you don't tariff stuff that we don't make and build in America. We can't sell a Ford or GM in Europe because there are 100% tariffs. In Japan, there's 100% tariffs stemming from the Marshall Plan. How about we say we are going to tariff you like you are going to tariff us? Of course, they're going to come in and negotiate, and their tariffs are going to come down. So they're not saying we're going to do this. They're we're doing this. They're saying they will come to the table to negotiate because they already have those tariffs on the United States. There's room to negotiate from their end. Treasury Secretary Designate Scott Bessent. And I like this guy with my Wall Street hat, I should say. The truth is that tariffs have a long and storied history as both a revenue-raising tool and a way of protecting strategically important industries in the U.S. President-elect Trump, but you could insert any president into this, has added a third leg to the stool. Tariffs as a negotiating tool with our trading partners. Listen to that, a negotiating tool. That's it, just a tool to negotiate. Our size gives us market power and the ability to dictate terms. Other countries need us more than we need them. We have but to use that power. National Economic Council Chair Designate Kevin Hassett saying, if you look at the Republican platform, the first listed trade policy is the Reciprocal Trade Act, which takes the U.S. tariffs to the levels that our trading partners charge us. What happens to inflation? Well, what's the next best supplier? What's the cost ratio between them? And if we bring new stuff to the U.S., what's the marginal effect of the marginal cost? Don't forget that the tariff affects the price level when it goes in, not the long run inflation rate. Basically, it's a level adjustment. And that's coming from Wolf Richter on tariffs. So calming down the screaming that you hear from both sides when you're leaving the stock market. It's like you're just hearing both sides scream, scream, scream. Like that, like just like far one side on economic policy. And the reality is it's more of a tool to bring people to the table to negotiate. All right, that's tariffs for today. Next up, we're going to talk. We're going to move into PPI next, but not right now. We're going to talk PPI and CPI in a little bit. And then we're also going to talk about some of that curve stuff and the rate cuts from the Fed and probably rate hikes in the future. Not today, but you can see it down the road. You can see that in the next 6 months, year or so, that we'll likely have to raise rates possibly. And it's not a bad thing, even though we may get air pockets in the market, some knee-jerk major downside reaction. It doesn't necessarily send us into a bear market. It's more reminiscent of the mid to late 90s, where the market can violently move to the upside. And what's fascinating is the Washington WAPO this morning had an article saying that's bad. And that reminds me of the talk this past week where you're being scolded by bond vigilantes that aren't real. They can be real, but they're not real today. And these people are just bullshitting you, plain and fucking simple. And I'll explain that later this afternoon, why that's true and that the bond vigilantes are, in fact, not here right now. Hold on here. So the reality is this WAPO guy, this writer was like, Trump or Jay Powell made a mistake. And he didn't make a mistake. He did a lot of work towards or bringing the economy back to normalcy. And it's funny because when these guys are all saying that, it's like everything that they say, like everything is these fucking bears. They just want doom. They're like, well, inflation is vertical, right? Going up, right? During one of the perceived worst times in history, right? COVID. Very unusual, right? Vertical, straight up. And then they're like, well, they're not going to be able to fix that, right? There's nothing they can do to bring that vertical inflation back down. We're all fucked. And then all of a sudden, you get QT and you get tightening, and all of a sudden you see, reopening of the U.S. and inflation starts to go straight down again, right? Tell you they can't. So as it comes back in line, oh, fuck. It's going to rip right through, and we're going to hit what? Stagflation. We're fucked. And then you see Jerome do 225 basis point cuts, then a 50 to arrest a lot of that data either flying down or flying up. And sure enough, what happens? It arrests the fucking data, doesn't it? And what do you get for that? Oh, the bond vigilantes. It's like, fucking A, at every single fucking turn. Every fucking turn, it's doom. It's not even just the doom, it's you can't do this and you can't do that. And sure enough, everything is okay. Just more doom. And they're doing it again to you, what? This week, past 2 weeks. Been doing it to you all vacation, haven't they? espousing more fucking bullshit. It has nothing to do with the price of the stock market. Nothing. There are times, cumulatively, when data does make permanent changes to trend in the stock market. But it's rare, isn't it? We don't fucking crash once a month, make all-time highs the next month. We don't do that. We don't have major trend changes every 3 months. If you speak to or listen to these guys, though, we do, don't we? Or the threat of it is always there looming, isn't it? What do I think, Bond? Well, we'll talk bond vigilantes here in just a minute. Because, and this is what I'm talking about with inflation. Very rare. Look back on inflation. How often have we seen inflation go straight vertical? No example in history, right? When the Federal Reserve cuts rates, so the Federal Reserve starts on a rate hike cycle traditionally, right? You hike rates, pause, and why do you begin to cut rates? Traditionally. Tell me. There's a recession on the horizon, right? And what did people do this past time we began to cut rates? You heard people discuss a recession in 2025, right? We're already in one. We triggered the SAM rule, right? The SAM rule, right? Which was bullshit, wasn't it? We weren't cutting rates because of an impending recession. If we were cutting rates for an impending recession, when we were cutting rates, right, what would have happened? Yields would go down. The bond vigilantes would have dropped yields, right? The last 50 BPS. That didn't happen, did it? Yields spiked, didn't they? That is not a sign of an impending recession, is it? So this would be the first time in history that we've cut rates not looking forward to a recession. It was used to rein in data that had velocity coming back in line. So if you have inflation racing up out like normally, but then all of a sudden, like, this is how that's velocity, that's velocity. Then we got COVID. Whoop. We start a tightening cycle that brings down a lot of these data points violently back in line, and we don't want to overshoot trend, do we? Blast through, right? And create stagflation. So you do 25, right? 25. And then as you approach, you go, you know what? We're going to arrest that with 50. And sure enough, what did the bears tell you? It's not going to work. And it did work, didn't it? It did work, didn't it? All of a sudden, the data calms down. The major data points calm down. And you get what instead? You get yields rising. Why are yields rising? Because the economy is okay. The bond vigilantes don't think a recession's coming. They think a new economy and business cycle is coming in 2025. The long end of that curve, right? The long end of those yields is going up. Meanwhile, what do? We get on CNBC, we get on Bloomberg, we get on Washington Post, we get on FinTwit, we get on Reddit, and we just hear garbage. Garbage. You get some fucking reporter that says, oh, here we go. I'm going to break out my stagflation. I'm going to break out my depression and recession playbook. We've never encountered this, have we? There is no playbook, is there? There's no fucking playbook. We don't have COVID every fucking 5-10 years. We have a steepening right now, right? A bear steepener, but it's at the bottom, isn't it? Is the bear steepener at the top? Remember we had the uninverted yield curve cap? 3 years. I had to listen to that on this show, in this chat. Yield curve cap, market's going to crash, bro. 3 fucking years. 20, or not 3, 2.5 maybe. Late 21, 22, 23. It's like fucking nonstop, right? We've never been in this situation before, and yet media is running a playbook on other or different times, different examples. This time, it was different. God damn, I sound like fucking Rush Limbaugh or some shit. Democrats in the audience are probably like, oh God, he's becoming a Republican. He's a populist. Not really. I'm more of a pragmatist, like pragmatic. Am I fearful of some of the proclamations Trump has made? Fuck yes. I don't want to see any of that come true. Maybe throw him a bone. Some MAGA wants to see that happen. I mean, even Elon was like, we're going to crash the economy. You might have a recession for 2 years and possibly even a depression. Fucking everybody's hair catches on fire here and there, right? Some people are like, yeah, bring it on. We want it. I mean, you speak to some people, they'll tell you point blank, yes, I want prices to come back pre-COVID. And you're like, do you realize they'll be burning tires in downtown Manhattan? They're like, I don't care. Fuck it. Let's do it. You know, I want to watch the world burn. Do you know what their real life is like? Probably not. Divorced, drinking all day long, got laid off. You know what I mean? They're like, fuck the world. So you don't know who those people are saying that, right? And then you've got this stumping on for an election, and then the reality comes in. And as long as we don't go and do the burning tires in Manhattan, the reality is we may not experience that like people are saying or thinking that we're going to experience it. Going back down again to test the 5-minute trigger. Still haven't touched it, though. Still haven't touched it yet. We should be concerned about that stuff coming to fruition, too. Like the illegal immigrant thing, Trump's own guy was like, we don't have the money to do that. His own appointee was like, we don't have the money for that shit. We're just going to take the ones we were already going to do, right? So as long as we don't remove, like, if you don't see like deportation camps in your hometown, it still hasn't happened, has it? It's just words. That's all it is. You need to see the funding for it. You need to see the rounding of everybody up. You know, it's not happened yet. So until that is confirmed to happen, it is to the right and up. And if anything, if you put just your Wall Street hat on, as Wall Street has said, they think that Trump can extend the stock market. So if you think that the top is in, keep saying it. We're trading 592 right now, almost 593. Less than what? $10 from all-time highs. Rates are going to climb and they won't be able to stop it. Fucking Jimmy Barry's like, I'm just going to throw a wrench in there every day no matter what he says. I'm like, hey, everybody like ice cream? Jimmy's like, they're going to end the delivery of ice cream this week. Fuck you. No ice cream for you. Jimmy's gonna have his revenge too when they finally do pop that first rate hike. Oh, Jimmy's gonna fucking parade through here. He's gonna get all dressed up, fucking put his tux tails on and shit. Crack open a bottle of Champers. I told all of you I want everybody's names. You guys told me a year ago that there's no more rate hikes. Rate hiking is done. Jimmy's like, I've been plotting my revenge for the past year. The moment we paused at that one, it's like the guy from the movie that writes the list of people to kill from that Adam Sandler movie. He's like, I will have my revenge within the next year. I'm going to go away for like a month and stew, and then I'll be back. Well, no, I don't think we cut anymore. I don't see any reason to cut anymore. I think we're paused here for a bit. And even this morning they were talking about more rate cuts. I don't think you're going to see them. But there's a lot of work elsewhere to fight inflation, and that includes tariffs. It includes that rate cut reducing inflation. It had an inverse effect. It's squelching demand in home buying and corporate borrowing. Tariffs, there's other tools that can be used by the president, by the Congress, and by the Fed, and by Treasury to fight inflation. It's not just raising and cutting rates. Now, I do think we raise at some point 25 BPS, but I don't think it's today. I think it's later in 25 or 26. Maybe the middle of 26, maybe the middle of 25, or heading into 26, you probably would see a rate hike if we run it hot, right, Jimmy? Like, you run it hot. We're in the middle of this, like, not middle, exactly middle, but we're probably halfway through where inflation doesn't hurt. Unemployment doesn't hurt. So we've got time here. And what's crazier, too, is Jimmy said this in the past to you guys. As long as we do not, as long as we keep raising rates, market will stay this bull market. Jimmy didn't quite say to you, though, that now we've raised rates, right? Most drastic and fastest rate in history, right? We leveled off. We made some cuts for different reasons, not for recession, to arrest data. So now we're here, right? And we're flat. And if you look back in the 90s, what did we do? We raised again. And when we raised, what happened? We had air pockets in the stock market, didn't we? Where we would bloodbath, down 15%, down 20, down 30. What did that resolve, though, to? Larger upside moves. No bear market. We stayed in a hot bull market, didn't we? And it was violent. It was violent and fast. How do you trade that? Maybe we'll talk about that later this morning. We are likely looking at that down the road. We've been harping on it for a year that we could enter that type of a trade. It's not here yet, but the pieces are coming together, aren't they? Where you could get that late 90s trade where you wake up or you walk into a Fed meeting and boom, 25 BPS, market craters straight down. If you're longing and caught in that, you hold, don't you? These are much faster moves than this is almost like a COVID move, isn't it? You just like one day, boom, down, right? But there's a quicker recovery, isn't there? Normally, right? Or historically, I should say. And they become larger and larger over time, don't they? You get like a 5% move down, 10%, 15%, but they all resolve to like double-digit recoveries quickly. I'm talking within like 1 to 3 months. Fast, right? Fast down moves, and then even faster upside moves. So we'll talk about some of the strategies to trade that. And shockingly too, right? If you're long underlying for that trade, and right now, what is good? Yields, right? So if you're building a cash reserve and you hold tight, right, in that violence, you get some volatility, downside volatility. You stay long. You have cash reserves to buy those dips. And maybe you're asking yourself, well, Cap, how do I know when that top is actually in? Let's look at it. How do I know, Cap? Fairly easy, isn't it? Let's look back at the early 90s or mid 90s. Can I get over there? Oh no, we gotta hold on a second here. We gotta do SPX. Oh, sorry about that. Hold on. There we go. We'll do SPX so we can get back in time. Put this back real quick. I'm thinking about buying a dip here in a moment. We'll watch this closely here, see if we lose support or not. In a second here, we'll look at SPX. Just 1 second here. Let's watch this closely while this all loads in the background. See if this holds or we begin to lose. Back testing the 5-minute trigger and the daily trigger here. We'll see if buyers have lost the will to buy here. If we do lose this, you will see us trade likely ultimately roughly 581.50. Watch this closely here. First target right here. This is the 1990s. This is SPX. And there was a lot of violence in this move. It began back here in 94 for the blow off top where everything was overvalued, right? We had some significant drawdowns in the stock market. So let's say pretend you were a trader here. So pretend right now you're a trader, okay? Most of you guys weren't trading back in the 90s. Some of you were, but most of you weren't, right? So this big giant move up here, right? And let me ask you to be honest with me right now. Like stone cold sober. You have this first drawdown here in 1996, right? This first drawdown was 12.4%. And it was violent. It was quick. 12% in a couple weeks. Down here, how many people do you think were saying, like retailers going, oh, fuck, man, market's over, we're going to crash? Right? How many bears were saying this? They were all short, right? How many bulls are buying this or staying long from this run? None. Get out, get out, get out, right? All of a sudden, market does what? This is over the course of about a month, right? Market gives, for those that held or even added, right? So you're up here. You don't sell. You add another 25%. You could actually count it even higher. You could go right here. Because we didn't pull back to our weekly trigger until up here, 35%. Another downside move, again, to the weekly trigger. That's where we're at right now, right? Weekly trigger. 10% downside move resolved into a what? 30% move, right? Yeah. Talk about getting shaken out of a market, right? Down here, 13%. Resolved to what? 39% up move. More violence. Can you imagine being long in this? Note, price went all the way to the monthly trigger on this one. Resolved to what? Look how big it is. 50% up move. Monster moves, right? Wham! 25% up move. How would you have known starting here to get out of the market? See, we're squeezing right now off that daily trigger, by the way. How would you have known? There's only one way, right? You ride it until price breaks the monthly trigger, huh? So if we enter some kind of a phase, even if it's minimal, let's say we don't even do the entire run. Let's say we do just this part of the run. You get long on any pullbacks to the weekly and monthly, owning the market until we break below the monthly trigger. And the monthly trigger begins to do what? Flatten, right? And turn down. You were even given an opportunity to get the fuck out in 2000, weren't you? They even gave you the chance to allow price to break below, return to the scene of the crime right there, and give you the chance to exit, right? Get the fuck on out. Weekly is sideways, or excuse me, monthly is sideways, price is below it. The entire run, price did not break below the monthly. So if you're looking today, and if there's the potential, woo, look at that. If you're looking today, and there's a potential for the market to trade a 1990s style trade, what are you doing? You're longing the market on the weekly, longing the market on the monthly, until price breaks below the monthly trigger, huh? And you stay long until that's done, don't you? And what does this look like right now? Looks like the start there of 94 and 95, doesn't it? Buy it. Buy it. Buy it. Buy it. Stay long. Rolls down. Stay long, right? Stops underneath, right? Price breaks under, gives you the chance to get out. Okay, I'm out. Fuck you. You're right. I'm wrong. I'm out of here. Whoop. Thank you, Bears. But until then, we haven't done that, have we? So you're just waiting down here at this point, aren't you? You were just given this week to get long. Look at that. Chance to get long on the weekly trigger. Already long up here. Chance to add. Chance to add. Maybe we have another year left to this. Add. 11:27, 3 more minutes left. They took a stab at it at 10:30 to send us down. They'll take another stab at it around 12, 1 o'clock. Yeah, you got someone's asking about no dip on CPI. You got first. I think I showed you guys this earlier, didn't I? Show you guys again. You can see you just showed up. Hold on. So here's SPX gamma. Your first resistance is right here. Your call wall is roughly 59.70. Known sellers are up here. You see that? So you've got sellers right where we ticked. Sellers at the call wall. Old man right there. PT1, 2, and 3. You got 3 stabs at it if you're a seller. PT2 is roughly right here. That's the 50. This is 59.70, I believe, on SPX right here. This is where the old men are up here. The old gym bros. They're slightly lower than this top up here. And here's your 50. This is the 59.50 up here. If we're done up here, you want to see this hit get hit. If you see that get hit, we'll begin our way down. We'll trade 81 on the deep end. It'll be 81. We're not there yet. We're not to where we can confirm that we're going to head to 81 or near there. You need to see this get broken right here. This one right here. Maybe I drop better right here. Hold on. You want to see that one right there? I'll just draw it in yellow. That helps. You want to see a new low right below this PT1. Here's your PT2 right here. Buyers were right here. Okay, so that was we went through what? We went through tariffs. We went through tariffs. We haven't done the yield curve. We haven't done PPI and CPI yet. And hey, buddy, how are you? We have to go through those three things to catch you guys up, and then we have to talk about yearly expectations. I talked about them yesterday with Discord members, and we'll talk about some of that stuff on public today. Spoo's losing ground here at 50.89.81. Bears want to see a break of 50.89.20. Sellers want to see a break of 50.89.20. If you're looking to sell this, should have a chance here to hit this, come up for this cross, and take this short right here for a big down move. Almost have the bear cross above the bear plane. See the doors closing here on bulls. SPX back testing the 5-minute trigger. I want to buy the fuck out of this so bad right now. Let's look at $96. 95. $95s are 9 cents right now. $94s are 17 cents. Last known buyers like right here, right in here, right there. Last known buyers right about there. I'm looking at 94s. No buy yet. Also note VIX 9-day getting knocked down to known support. Some danger here for bulls. VIX 9-day trading 1494. Known VIX buyers at 1360. Watch out for Dixie coming down in a quick squeeze here. Be careful of a squeeze. Dixie being rejected on its pivot point. Yeah, probably shouldn't be long here. Yields are bullish right now. Need yields to get shanked. Dixie right now bearish, but yields bullish. Mixed bag here. HYG looking bullish right now. Pay very close attention here. This 1 and 5 minute trigger crossing down. I don't like this here. This wick. It's pretty bearish here. This green, this wick here, bad. Bearish. Sellers trying to sweep and clean out the squeeze from this morning. Gaza hostage and ceasefire deal is reached. Axios citing U.S. officials that a Gaza ceasefire deal was reached per Walter Bloomberg. Careful of volatility here. That was just a few moments ago on 3 minutes ago on Walter Bloomberg. Haven't seen anything yet. I don't know if it's
women and children under 19 detained since October 7th, 2023 by the end of phase 1.
See what market reaction is to this.
William says the view on neutral rates are not a big issue when setting monetary policy.
Let me see if I can find anything else on this. No other information right now on this report. Axios. Jake Sherman's not saying anything. Punchbowl, I don't see anything.
Which is apparently seen by sources familiar with the matter. Again, the summary of that's on the feed for anybody interested.
Yeah, I'm looking right now. I'll check Axios. Not seeing anything yet. MSN is picking it up right now. I'll see what I can read to you from this. This was 3 hours ago. Deal is imminent, but I'm not seeing anything yet. Was able to download that. Not seeing anything else on Axios right now, or in the report saying that the Gaza ceasefire deal has been reached. Largest macro ETF shorting since 2021. GS Prime Book. Current macro discretionary equity short position is elevated at GS. Prime Book ETF shorts are up to 24% in the last month, the fastest pace since February 2021, i.e., the meme stock. ETFs as a percentage of GS Prime US short book is the highest level since 2023. SPX flirting right now with gamma, with positive gamma here. Parked on its 5-minute trigger and just above the gamma flip. Gamma flip is just below PT1, PT2 right here.
At 12 p.m. Eastern Time, we expect comments from Fed Scoresby, who speaks at the Midwest Economic Forecast Forum.
We got some updated gamma here. Hold on. Let's make sure we're not in negative gamma land yet. We are below. Be very careful here. Have some updated gamma. We are now below gamma flip. Call wall is higher. $6,000. Support is just below this gamma flip as well. It's at 58.95. We are tightening right now. Put wall is just where the sweep is to close the gap on the downside. Yeah, local support is here. So you can see this over here.
At 12 p.m. Eastern Time, we expect comments from Fed Scoolsby, who speaks at the Midwest Economic Forecast Forum.
Completely. Just note here, if you are a bear or seller looking for these two PTs to begin to make a big move to the downside, and just so you guys can see this is where the instigation was right here. See this little box right here? So the initial buyers stepped in cash market. We're looking to see if those buyers are gone. Not quite there yet, but if we can break below this PT1 here, you'll see a giant move to the downside. So far, this is where those buyers were, somewhere in here. Trump transportation nominee saying that if confirmed will allow Tesla autopilot probe to continue. Windmills are an economic and environmental disaster. Okay. Windmills are, this is from Donald J. Trump, right? Or 2 minutes ago. Windmill, I just like reading that. Should make a t-shirt that says fuck windmills. You just like kick the windmill when it's down. Yeah, windmills blow. I gotta make a t-shirt for our merch. I'm stealing that. Windmills blow. Still no word yet if the buyers are gone. Don't know anything right now. Nothing's going on here. Sideways. Not a goddamn thing. Fucking windmills blow.
Shortly expecting.
You could have like a picture of Trump in the background, like a windmill. And like Trump like yelling and like breath coming out. Windmills blow. Spy trying to pull its spy or begging to try to get a little bit higher, fighting to get a little bit higher. We don't know if they can do that or not. Traders looking for the trip lower. They wanted to do it off the bell, right? I think I even said that. I was like, let's take this shit back down. Right to 581.19 or so. Not happening yet. Buyers stepping in still. Tough to hold their pants up. 12 o'clock. We'll find out if Vol Control Gang is still gone. We are slightly below on... We're roughly right now at where dealers become sellers, buyers are kind of neutral right here. They really don't care. They're not really pushing the subject right now, but not necessarily. For dealers here to become sellers, we need to get under here. Just a little bit more. Or for dealer amplification to the downside, they're not quite sellers yet. We're looking here, find out here if Vol Control. Well, let's look at Vol Control, or I'll look at it really quick. See if Vol Control may step in or not. They were pretty close to... Vol Control was close to a bottom. Let's look at Vol Control together there. There can be an argument for both here. Let's take a look here, because we're coming into like the Vol Control part of the afternoon. This is Vol Control funds. You know, it's like... We're close. There can be an argument made that there's more down to go. You know, even lower maybe down here. But this is still some kind of a... You could still see, you know, at least initially... some support by Vol Control. Maybe this helps to get to where the old man sellers are, just a little bit, and then we drop back down. We're very close on like Vol Control, CTAs, COTs being in some kind of support. There are bears out there, like COTs. They're waiting for trend to be lost on, or for them to remain buyers, but that hasn't happened yet either. So they're actually where the buying starts. COTs are right now. Trading higher now, trading 590.44. $590.58. SPY trying to recover. No joy yet for sellers. No trigger for sellers yet. Just consolidating down here right now. 1 and 5 minute trigger trying to reverse to the upside. We had a bear plane up here, but no joy for the targets you need to get to 82. Just let's look at this really quick. So you had sellers come in, drop down, right? Sellers needed to get down here, believe it or not. What happens is you're Xing out the buyers on the day, squeeze higher. This 1 minute trigger comes down. We start heading down to 81, 82. So far, they were unsuccessful. They didn't get the new lows down here. This is where the buyers were on the opening bell, so they're not done yet, theoretically, at this point. Or at least they're making an attempt to be buyers. They bought here. They bought here. They're going to try to send this back up again. It's 12:04 right now. We'll see if we can turn this back to the upside. We can turn this around, try to get this higher. If we do get this higher, we should trade. This is where we're told no. If we're told no here, then the next target is this PT2 right here, right over there. So target would be 593.84, something like that. 593.84. Roughly there. Be very careful. If you're a seller here, be very careful of squeezing above this white line. You still own it right now, but if you get above here, it's going to squeeze. It'll be violent. Sometimes you'll get the sellers coming in and they're just waiting right here. Just be like, wham, downside. Sellers watching closely. Their stops are right here. Spoo's trying to hit that upper white line right there. You see it? Trading 590, 81, 86 right now. Testing stops on sellers.
Fed Scoresby says, I still see continued progress on inflation.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Scoresby says, for the last 6 months, PCE inflation has run close to the 2% target. I'm optimistic for 2025 on a soft landing. Goolsby says there's an uptick in business confidence and uncertainty since the election.
What are you doing, sellers? Fuck are you doing? What is that? Should I post the Legion of Doom meme?
And Goolsby says the CPI report is somewhat encouraging, somewhat discouraging in equal measure.
Let's look at that.
Goolsby says, I'm wary of seasonal pattern on inflation.
SPY starting to squeeze. SPOO's coming back into the gamma, positive gamma. This is positive gamma right here. It was lower, but it's raised up now. It's up higher. Upside target 6,000. I said that PT2 I had right here, but it's actually way higher. Gamma profile is changing. So we had this one perfect. This one was good. This one stays. That gamma bar is there, but that now there's another gamma bar.
Does have to think about that. What matters?
Give me a second here.
Policies as a whole.
It's way higher. It's like way up here. That's PT2, but it's like way up here. It's actually at R5. That's way higher. I don't know that we can get there right now without clearing out that bottom stuff, but so this was PT1. We already hit it though. We already hit this one. So like just a note here for all of you out there. So this is R3 right here. So this is R3, right? We already hit this PT1. We should.
Points this year again. That's Bank of England's Taylor.
The thing here is that like important gamma. The most important gamma right now is up here, which is R5. That's maybe in a day. I don't know if we can get there though. It's pretty fucking high, right? 598.76. This would blow out like every seller. That's a tough give for me without closing that gap down below. We already hit this one, so everything is clear to get up there. believe it or not, everything is clear. So I don't know where this leads. I don't know if this leads to like that down move, up move, down move, up move, and then eventually the roll down as the day wears on. Unless they're trying to tell us that we're going there right now, like that we're gonna rip before closing the gap lower. Buyers are still here, so we'll change that to green. We at least right now they're here, so we know that the buyers are here. I mean, I'm a pretty bulled up guy, and even I'm a little shocked. Vol control gang is here too. Volatility control, at least temporarily, they're here. Did I get rid of it? I saw theoretically. Market wants to go there. I mean, it's like really high, like it's up here. I'm still finding that hard to believe before retail sales. We'll put it up there though. I think it's a really bumpy road to get there. There's a big giant gap in here. Let me show it to you guys really quick just so you can understand where I'm coming from here, maybe visualize it. So just so you can see,
Supply chain healing was what allowed inflation to come down without damage to the labor market.
you see this, like, see all that downtrend, right? I got maybe I'm drawing that slightly wrong. The call wall is slightly above where that downtrend is. So maybe I'm drawing that wrong. I'm getting a little excessive here. It's right here. So we'll make that for and we got a lot of time here too. So let's look at triggers really quick. So where's 4 p.m.? So Wednesday 4 p.m. and we get some time here, don't we? We got till 1600. So between now and 1600, they're saying, we'll move that over. They're saying the way is still higher up here. Now there's traffic here too. We did take this gamma bar out, or most of it. This gamma bar this is a gamma bar right here, but we've taken most of it out. So if we go back up here again, theoretically, unless these sellers here sell us down, if we don't stay trapped in here, there's nothing here stopping us from going up there. There's zero stopping us from going up there. So, and we're going to call the gamma, the old Jim Bros. So we'll call this PT2 and the old Jim Bros. And it's slightly higher too. It's like just above, up here. Just get rid of this PT3. Just make that PT2. I don't know if we can escape to get up there. These, you know, got the sellers came in here, right? Supply right here. Buyers saying they're still here. This is earlier this morning. Right here. So they bought. Come back down slightly higher and buying again. It would say it's up there, but we still haven't escaped. So I'm going to assume that the supply is right here trying to sell this down. Say fuck you, no. So we'll keep an eye on it, see what happens. Well, they were right here, right? So supply was right here, then sellers step back in right here, and you're going to assume they're roughly right here. So they get one more shot at it. They still have a shot at it. It's going to be, what matters now is, are these buyers here? So they were down here, right? So are they right here or not? You can't lose this as a buyer, by the way. You can't be down there buying and then, well, fuck that. Let's bring it back down. Get some more deals. There shouldn't be a liquidation break here. It should just hold. If this is lost and you're a bull, sell. If you're long here, sell. Only, I mean, if this is lost, that means they're gone. They're not here. I guess you could make the argument that you can go that far. Fine, I'll give you that. You're a fucking bull. There you go. I'll give you that whole green box. There you go. We'll move these PTs over here. Leave that over there. Set it up again.
Bank of England's Taylor says the rise in gilt yields doesn't make things.
Just note here too, if you hold this, this becomes valid up there. There isn't much stopping that move higher. And SPX gamma is just like flirting on positive and negative. There's no edge for sellers here yet until you get down here. Until you get the start breaking down, you're not going to get the amplification of the sell side or the dealer amplification to help you on your way, like the momentum that you need. So you need to like get supply selling, then get the amplification of dealer selling. That over so you can see it. This is actually higher now. What's crazy too is we've got today's Wednesday. We got 2 days left. We've got some Vixpiration and OPEX on Friday. What's up? What else is fascinating about this too is so we had the drop on December 18th, and we're coming into OPEX. So you get markets manipulation, parking the bus, market manipulation. Yesterday we were at 580. We're like, hey, we're gonna park the bus for OPEX on 580, right? And now we're trading 590. And looking back into December, we were at 600, right? So is like January OPEX at 6,000 or 610 or 605, or is it lower? Where are all those spreads at, right? So, and we also have like the double whammy of Vixpiration. We have retail sales tomorrow. So you can get wild ass moves, right? You already know this for Vixpiration and OPEX. Well, you've got the park and the bus of OPEX, and then you've got the Vixpiration resetting that goes on Friday, and we have a short week next week, and we have Trump, and of course everybody is like, regardless of what your political background is, if you're long or short, you got your stock market hat on. You know, you're like, if you're long, regardless of political affiliation, you're long, you just want Trump to be happy, right? Like, just like, be nice, say nice things. If you're short, regardless of political affiliation, you're like, fuck it, bring on the doom, you know? Say something fucking stupid, please, between now and Inauguration Day. Say some wild ass shit for me so I can get us down. We were talking about that in the yearly outlook yesterday, that to not put so much weight right away in Trump and the crazy policy stuff, but you still have to be aware of there's like 3 different Trump trades, right? There's like a Trump trade of the crazy. I mean like implementation of crazy. Like you've got National Guards people in your hometown. You got fucking I don't know, like concentration camps all over the place and stuff like that. That's the true crazy, right? And then you've got, whether you like that or not, I don't know, I don't care, but that's the true crazy. Then you've got the second Trump trade, which is the stuff that Trump wants to push and not push, right? Like I don't like EVs. I do like oil or gas powered engines, I guess. That trade. Then you've got the third trade, Trump trade, and that is the one you really have to watch out for because he is becoming inaugurated, right? He's going to be the president this week. So I behoove you, if you're just tuning in, I behoove you. If you were not trading in 2016, 17, 18, 19, 20, if you were not a market participant at that time, I'm going to tell you right now, I don't care, give a fuck if you like Trump or hate Trump. Please do yourself a solid. Pay attention to every press conference he hosts. You either have to sign up for Truth Social, or you can also get, there's a Twitter account for him on Twitter. It's called Trump Tweets, I think. I think that's the handle. No, it's at Trump Daily Posts. At Trump Daily Posts. It's like an auto retweeter from Truth Social. I'm assuming there's a version of this on BluesSky if you're on BlueSky. Do not rely upon Reddit. Rely upon like either Truth Social or his like own personal Twitter, or or his own personal Truth Social that posts the Twitter. And then you also want to make sure that you put on your tweet deck the White House press secretary. You know how like almost all prior presidents, regardless of political background, you don't really need to be monitoring the White House press secretary. When Trump's president, you monitor the White House press secretary, whoever the mouthpiece is or mouthpieces also associated with him. So, like Elon might not move markets right now, but guys like him, you may want to begin following, even if you don't want to, whether you like him or I guess this is mostly to people that don't like him. I don't know if it's going to be Elon, but like there was, who the fuck was the guy back in the last Trump presidency? His it wasn't Rumsfeld. It was, he reminded me of Rumsfeld. He's the old guy from Wall Street. Forget his name. I'll have to look it up. Here, hold on. I'll look it up right now. Trump's first cabinet. No, fuck was his name. Creepy ass motherfucker from Wall Street. Not Mnuchin. Yeah, Mnuchin kind of had he could move markets. Who's the other fucking guy from Wall Street? It wasn't Lutnick. Who was the other guy? The guy, Wall Street guy. They wheel his ass out. I don't know if it was Lutnick. What was his fucking name? Creepy motherfucker. What? Nah, not Tillerson. There was a guy. Nope. I'm looking at right now. Maybe he wasn't a part of the inner cabinet. Wasn't Mnuchin? Was it Mnuchin? I don't think it was Mnuchin. Kudlow. Boom. Winky got it. Larry motherfucking Kudlow. Thank God. That was it. Winky got it. Winky got it. 100%. You can tell who fucking traded back then. Goddamn Larry Kudlow. Fucking Larry Kudlow. So you're gonna have to somehow watch these guys, like whoever Kudlow is in this admin. I don't know if it's Elon. I don't know who the fuck it's gonna be, Bessent or whoever. But you're gonna need to start following these guys. I'm telling you this why right now. If you didn't trade in that time period, right?
Fitz Goolsby says I'm pretty.
Like if Biden says I'm holding a press conference at 3, it's a few rules here. There's a few rules here. Any other president's like, I got a presser. They're going to do it after 4 p.m. They're going to be like, 5 p.m. we're going to do a presser. The president, no matter who they are, is going to show up at 5. Trump is going to tell you on like a Friday or a Tuesday, I'm having a presser at 3. He won't show up. The moment they announce the presser, the market's going to fucking blood. Then he won't show up. He might show up at 3:30. Market might recover. He might even show up after 4. Market could blood all night long. He'll tell you something fucked up like, I don't know, fucking, we're going to war with Russia over Greenland tonight. I'm going to launch nukes. Shit like that. And then he'll tweet at like 8:30 in the morning and be like, we just made a 20-year deal with Russia for Greenland. That's back on again. Even if there isn't a fucking deal and there never was going to be anything. And then the market will recover. I don't know if we get that this time around, but you should prepare for that now because we only have a couple days left in the market for the inauguration. But you just need to be aware of that stuff moving forward. If you're a futures trader, if you're not already trading on a prop firm, I might recommend that you do switch to a prop firm, at least initially, instead of your own money, just so you don't get blown out in a major way. It can take you right out of the market forever. So pay very close attention at the first month or so, 3 months, first 1 to 3 months, and see if he moves markets like that. That's not the norm for us, not the norm for markets. But if you don't listen to me, right, I'm going to tell you right now, there's about a 95% chance you're going to remember this conversation and say, fuck, he was right. I just blew up 50 grand, 100 grand quickly. So pay very close attention to what I'm saying here right now because it can be used to your advantage. If you go hands off the first month or so and just see, if you're a futures trader in particular, you can just be hands off. And if you notice that it happens a lot, you can use it to your advantage. You can say, okay, I'm only going to trade futures, Globex or whatever, when he comes out and announces something. Like, I'm going to have a presser. Market drops, you can get in long. Or he announces something positive. It's not always negative. He might say something like, I don't know, I love the S&P 500. S&P 500 goes moon. And you can short that, right? So you react rather than act. You're not like, hey, I'm just fucking out here dicking around long or short. And all of a sudden, Trump announces something batshit crazy, and you're getting annihilated. So you can become a reactionary Trump trader. But consider that, especially if you're in futures or zero dates. During COVID, there was more people at home trading, so your overnight holds would usually maintain value but there was a lot of people in those trades. What I've noticed after post-COVID is that dealers will fuck you even if the price is higher. What I noticed, I don't know if that will change or not, but right now, what I've noticed, because the market isn't as liquid as it once was during COVID, what I notice now is, let's say this is 4 p.m. and this is 9 a.m. I will sometimes see price come down into 4:15 p.m. It'll come right down here. It'll recover, let's say, right about here. And let's say a zero date, or it would be a 1 date if I was buying it here, but it turns into a 0 date. Let's say it was, I don't know, fucking 10 or 50 cents. It was 10 cents down here. It'll still be 10 cents up here. COVID, it would if you bought this at 10, it would be 50 on the open on that recovery, but I haven't noticed that recently. So they do fuck me now in the after hours and pre-markets. Even if I'm buying the lowest low in cash market and it rips higher or recovers by next day, we just don't have the liquidity in the market anymore. I think that's what it is, or that's what I think that it is. Trading higher right now, trading, Trading 591.40. Market's just grinding around. But consider that into this weekend. Think about there being an inauguration coming up. Start paying attention to the White House, the press secretary, whoever's making announcements. And you might get caught in, like, let's say that we have our own Larry Kudlow this time, and, you know, they wheel his ass out one day, and you're like, oh, shit, they're bringing him up to talk crazy. You know, like a guy like Larry Kudlow would come right onto a press conference and just be like, fuck all your calls. Like, literally. And the market would fucking just dive. Woof. Straight down. That didn't happen. That doesn't happen during most presidencies. Sometimes it happens. Back in the day, you'd see like a Senate hearing where the Fed might say some whacked shit, and the market would crash basically in a day. But we haven't seen that in a long time. But I want you to know that there have been moments in history when the last 10 years, not just Trump, but the Fed used to do that shit, and then Trump did that shit. And you want to be paying very close attention. Coming into the second sell point period, the first one right here. First chance for sellers to jump in and get one last down move. Didn't work. Now we're coming up to the second sell point for those sellers. 12:36 right now. Heading into the 1 o'clock hour. Remember, this was a gamma bar, but it was weakened. Or no, this wasn't a gamma bar. This was just a gap, a value gap above. Pull this back. Just be conscious of that stuff, regardless of your political affiliation. If you don't like Trump, right? I don't fucking care. I'm telling you right now. You will learn. Like, I don't want to watch Trump tweets or Trump press conferences. I'm warning you. You will get fucked. You're gonna get to know Trump, whether you like it or not. You're gonna become bedside buddies. Yep. Yeah, I'm with you, Condor. Condor saying the Trump kids' tweets, they were the setup trades to Trump press conferences more times than not. Ooh, that's good insight. So thanks for saying that. Nice insight. I forgot about the kids. But you're right. Condor LVR making a comment right now in the Discord. He's saying that the Trump kids' tweets were like pre-warnings. They might they would broach a subject that would eventually, if Trump would eventually like hold the presser or something like that. This is bringing back like nightmare flashbacks. I'd be like long and like with heavy, like, or not just long. I shouldn't even say that. There was a time. There's like two stories I got for you. There was a time where I was buying puts when we were crashing, and I jumped out for like a week, and I couldn't afford to get back in. That's how expensive puts became. Like, puts were like $20, $30, $40, $50,000 a put. That was close in the money. Like, very expensive shit. If you got out of that trade, you couldn't buy back in. It was really fucked up. There was another glaring thing that makes me still flinch to this day, which was I'd be like long in the overnight in like a lot of money. This was after the COVID crash. And the market would like be down 5%. 8 was, I think we had 5 to 8% down overnights. I think that's how I remember it. I don't know if I'm 2020 hindsighting this, but I have like bear goggles on or something, but I remember staying awake all night long. I mean, all night, no sleep. And like 9 o'clock in the morning would roll around and the market would recover. But you know, like that shit would make you sick to your stomach. Like one tweet, one press conference at a close, and my shit is not just on fire; it's just gone. After the bell, and there's nothing you can do about it. You're just watching the fucking price just get annihilated into 9 p.m. and then you're watching all night long. And you'd see like a Fed put come in at like 1 in the morning, 11:30 at night, and then you'd see Trump come out in the morning and save the market from his toilet bowl, fucking tweeting and shit. And I don't know if anybody remembers that time, but if I fucking went gray over that shit. Stock market climbing higher right now. Keep on squeezing, baby. Keep on going to the upside. Coming in back into R3 once again. Just note that the first group of sellers up here, whoever they are, they could be here too, again, trying to get some more liquidity for another downside move. You know, I'd want to sell that back down again, right? Just be careful of those guys. See, they're right here. These aren't the old gym bros. These are the young gym bros. We'll do young gym bros again. We haven't done that in a while. We got the old gym bros up high. The young gym bros are right here. They missed. This is the Chamath I lose leg day. They're over here again. Like right here. PT1 was already hit. Old gym bros are up here. Can see him up here too in that white line. Are you talking about the 10-year? Does the 10-year yield matter right now? Hold on. I got something for you guys on yields. It's a pretty fucking big drop right there, right? Look at that shit. That would be nasty, wouldn't it? Woo. Even if we are going higher. Back in positive gamma once again. A note here that we back tested the daily trigger successfully. We have not done that in quite some time. It has been a long time.
Fed Scoresby says the neutral rate is lower than where we are now.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
Yeah, I'll bring up Q's next. Thanks for saying that, Binky. Yeah, I've got a sell signal up there too, Bink. I think we can extend this one up. See if we can grab this. We held that target of 515. This is Q's right here. Uh, 519.49, 518.20.
So seeing a release from Fed's William here says there's no prediction when the balance sheet contraction will stop. Term premium factors are a big part of rising bond yields. Reduced immigration will likely mean a slower growth. Also says it's hard to know how Fed bond holdings affect yields, and the Fed has no current.
So this was your expectations last night. Question becomes, can we do this one more extension up here? Because we hit the target, but it's holding. So can we get the second pump or not? Big question mark here. Five minutes coming through right now again. coming into the 1 o'clock hour here. I got to go potty really quick. I meant to go potty a long time ago. Pay very close attention right now. I want you to see where we are on bookmap here. So Q's is trying to extend its expected move. It's defending 515 on its Q's or on its daily trigger right now. It's trying, and also I think futures NQ is coming into the resistance of its daily trigger. So this will be a pivotal moment in the market here. If everything is together to roll, or if we get the extension up. The young Jimbro is trying to come in again to send this back down, so just be very careful here. There's nothing underneath this. I'll be right back with you guys. I gotta go potty. I gotta go to the bathroom. And thanks for tuning in today. I appreciate it. What I got here? Old man, be right back. Check this. Like, do you get that extension up here? There's no market above, or we lose all of this first.
Israel's PM's office says unresolved points remain in the Gaza Pact. And Israel's PM office adds that we hope details will be finalized tonight.
All right, I'll be right back.
So UN aid spokesperson says the UN can only deliver as much aid to Gaza as conditions on the ground allow.
Oh yeah. Ooh, I just got a bunch of weights that were dirt cheap. Kind of stoked. Dirt cheap. I just paid so like during COVID I couldn't get weights. I could only get the only thing I could get during COVID was like plastic weights delivered to me that you had to fill yourself with cement or concrete or cement and then fill it with water and have it harden. And I just bought I bought some more weights. It was 40 pounds of dumbbell weights. And the description was 40 pounds cement dumbbells, right? I figured it was $24 for 40 pounds. And I was like, oh, I've got bags of cement. I was like, they'll probably send me these plastic fucking weights, and then I'll have to fill them myself and make the dumbbell. They were just delivered. They were filled and set cement dumbbells inside of like the polyester whatever. So they weighed a fuck ton. I paid $24 for 40 pounds of weights. I can't even find weights on Facebook for less, like used weights. I can't find them for less than $1 a pound. Sometimes $2 a pound. Yeah, if I buy dumbbells, like metal, or not dumbbells, if I buy plates, the cheapest, I don't even think I've seen $1 pound metal even used. I haven't seen them for $1 for a while. They're like $2. What I've found right now is like $2 a pound. My delivery driver does hate me. He struggled. He got his workout in for the day. And they felt heavier than 40 pounds. So I'm like, yeah, it's cement and water. Maybe it's like more like 50 or 60 pounds. It felt like more like, but maybe because there are bars in there and stuff. Maybe that's why I felt like 50, because they give you the extra bars and shit. I don't use the bars, but so I got them from Amazon. I kid you not. Let me see if I can find this. I'll post it in the Discord. Let me see if I can show you guys. I'm like serious. Like that's very rare. Like 50, basically what, 60 cents a pound? Check this shit out. Dirt cheap weights. Like dirt cheap, pre-filled and set. I'll post the link to it right now. $24 for fucking 40 pounds. I'm shocked. So whatever. Dirt cheap. I like like the blocks and stuff for dumbbells, but I don't have the money. I can't justify the money for that shit. I'm like, I can't spend $500,000 on. I'm not a weightlifter. Like I work out to not die of heart disease. I work out so I don't die. I don't get a blood clot in my cankles from sitting here all day long with you guys. But that's dirt cheap. Less than $1 per pound can't be beat. And you don't have to fill them yourself. You don't have to buy that. You don't have to go to the fucking store, buy the concrete or cement, fill it up, water it, shake it all up, let them set. You don't have to do any of that work. It's just done. I don't know how they shipped them. I'm assuming that I'm assuming somebody got stuck with these weights. They filled them themselves, and then they're shipping them like they're books, because the box came like double boxed with like a plain brown outside box. I'm assuming that they ship these fucking things like with book rate or something like that. There's no fucking way they paid the shipping for a 40-pound box or 50-pound box. No fucking way. They gotta be running a scam. There's a scam being run. I don't know what it is. Let's flag them down and tell them it's the wrong order. Fucking but that's dirt cheap. It was $25, $24.99, fast free shipping, 40 pounds of weights. Deal. I might buy some more of these fucking things. Oh, they got a store too, so I'm like, do you have any Olympic stuff? Like now I want to know if these guys have wait a minute. Cap barbell rubber Olympic bumper plate. Ooh. How many pounds is that? 45 pounds for this is still pretty cheap. $56 for a steel for a cast iron with rubber. And it's got and you can I think you can take the what do you call it off? I think a competition elite. $43 for 45 pounds. That's dirt cheap. Economy, what is that? Economy speckled pro, $48. That's still kind of expensive. I just can't believe. What must be looking at? They got a nice rack here too. They got a nice power rack. No, that's the same power rack they got at fucking at Wally World. See if these guys got anything else in here. Any other?
Expecting the results of the Fed reverse repo operation.
Cap barbell 2-inch Olympic grip weight plate, $24. How many is this shit? How much? What's these are 2.5 pound. These are only 2.5 pounders. What do you get here? You get 15 pounds for $25, but those are steel. See what we got here. They still got some pretty. The kettlebells are they're okay. The vinyl filled ones though are fucking awesome for the price. For some reason they're not showing up in this company's store. Olympic weight plates.
$39 counterparties take $119.977 billion at the Federal Reserve Repo operation.
I'm looking for cheap shit here, like the film concrete. Maybe I should type in concrete. I've seen all kinds of fucking crazy shit. Like some guys will take like 5-gallon buckets and they'll make their own plates, but they don't have any plastic to protect them. They're just like concrete plates. I don't know if I could ever get that ghetto. That's some like Rocky shit right there. Trying to look here to see if there's any Olympic stuff that's dirt cheap. Cap Olympic bar. I don't know how to get really cheap Olympic plates. Like 45s. Dirt cheap 45 Olympic plate. I'm going to probably have to go to Facebook to get some of those. I mean, I'll fill them myself. Still riding to the upside right now. Well, they polyester, I think, is what they make the outside. Polyester. I don't see any ones. I don't see any that you can fill yourself that are like, 30, 25, 30 bucks. 100-pound sets are roughly about $90. It's like a 25, a 15, and a 10 for each side. That's kind of cheap. I fucking hate spending money on weights. Watch me just make some of those concrete things. You know what I could do is I could possibly maybe I could make the concrete set and then spray it with rubber or like liquid rubber. Fill a menudo jar with concrete. Menards jar, you mean? No, I can't afford it. I can't afford that shit. I can't. I can't justify it. So when I go to like Craigslist and Facebook, their per pound weights are $1 to $2. I just found weights on Amazon for like 50 cents a pound. Pre-filled, everything. I kid you not. I'm acting like I live in Somalia. Fucking full on fucking like backyard Rocky shit. Yeah, it's not cheap. Yeah, Dairy Doug saying that the cheap ones smell. They smell really bad. I can't justify it. I don't know. Some things I don't want to pay money for. I'm like, fuck that. I don't want to buy nice wet. Well, like I don't look like I'm not a weightlifter. So I don't have like my gym is kind of ghetto. It looks like, fucking Rocky shit. Like like all my weights I've made and filled. I kid you not. I like make my own weights. I don't make my own bars. I don't make my own weight bench, but I got my incline bench is a piece of shit. And my squat rack is kind of shitty too. They got my squat rack's got like a pull-up bar on it, and I'm like, fuck no, I'll break that thing. I was thinking about filling it with concrete or another steel, I actually have some like old steel pipes. I'm like, maybe I should change that pipe out for a real true steel pipe. It's like thin steel. I'll take a picture of it someday for you. I'll take a picture today after the show and show you how fucking ghetto it is. I just use it to grab the bar from me. And I've got a gym. This is the most fucked up. Well, not fucked up part. So I got a gym like 2 blocks away from me. I have an actual gym, and it's kind of nice. And I don't go there because they don't allow kids in. So like my kids I work out with to keep them healthy. Like today, like they play sports and shit, but like schools don't give a fuck about the health of kids anymore. At all. Like I live with saying live with my kids, but like I live with my kids. Like I do shit with my kids. Like Sunday I spent 3 hours driving with my daughter. 3 hours, like practice this kind of shit. And like I live with my kids. So they can't come work out with me in my local place. So I built like a home gym. So that they would understand that, you know, they have to stay healthy. You sit in a chair your whole fucking life, man, you'll die, right? You know, I see that all the time. Like people aren't fat, they're skinny, and they like die 30, 40, 50 years old because they sat in front of a fucking chair or in a chair all day long. Or they just implode. They like hit 50 and 60 and you're like, whoa, that motherfucker looks really old and sick. You work on math with your daughter a lot? Nice. Yeah, math is hard. We do the math thing too. We do math. We do writing and essays and reading and musical instruments and all that shit. My dad wasn't. I was talking to Joe Donut last night, and we were talking about like our dads and how they raised us as, you know, first sons and all that kind of stuff. Way different than what we do with our own kids in that time period. Let's start talking about some stuff here. We're going to talk about we have some stuff we have to talk about here, market related. Okay, so what we're going to do here is we're going to talk about earnings. We're going to start looking at some earnings stuff. Okay, we got earnings kicking off, right? We got the bank starting to report. Hold on here. And I haven't spent too much time talking about it. I've been selling down into earnings, which is outstanding, right? It leads to a good earnings season. We're going to start chatting about earnings. And we're going to try to identify some stocks that might be worth trading. So we were talking yesterday about, in a private stream, we were talking yesterday about some of the rules. Let me read some of these rules to you here, because some of you watching this broadcast, go get your friends, by the way. Go out there and like tell your friends, fireside chat. This is going to be a good conversation, worthy conversation to be listening to. And we're going to talk a little bit about expectations for 2020. Exactly, Doug. That's me. That's me, Doug. That's me, brother. That's totally me. That is what my shit looks like right there. Trading higher now, coming back into that earlier daily bar up here. Young Jim Bro's getting run over right now. So gather around. We're going to talk about a couple things that are important. We're going to talk about some stuff on public. So everybody does a yearly expectation, right? You get them from Larry Williams, you get them from GS and JPM, you get them from Tom Lee. And yesterday I was talking about how every year I try to write one. Now, I don't write these things because I am trying to have a crystal ball. Be like, this is how it's going to be, and I live and die by this, and I'm either right or I'm wrong. I don't write the expectation for being right. I write it for a plan. And the reason I write that plan is for when it is wrong, I can know what to do, right? And I adjust that plan as I go along. So I write one for the year, then I write one for Q2, Q3, Q4. I write one every month, I write one every week, and then I write one every day. I write market briefs for you, weekly expectations, 4-hour expectations, daily time frame expectations, 1-hour time frame expectations. And then even in the morning when I wake up, I redo charts every morning. Every single morning I go out there and I look at them. I look at a monthly basis chart every fucking day. David AMS talks about doing this too, right? He's like, every day I redo my charts every single day. And you should do something like that. You don't have to, but it's a good tool for your tool chest. You have a pretty decent market awareness, even if you're wrong. You have like a map that if this, then that. If not this, then that. As a market participant, you are not going to be right. You could go on runs of being right for weeks and months and then have a string of wrong, right? That's how probability and statistics works, right? The market's already working against you. The professionals are already working against you. Your own brain is probably wired counter to what is actually going to happen. So there's so many things working against you that this stuff only helps, right? It's helped me greatly as a trader to not fucking blow up my fucking account. And I've blown up accounts, right? So anything that I can get that helps, and this is one of those things that helps. You don't have to be right. If you write one for yourself, you can just say, hey, this is my expectation for the year. You do them every year. Some years are clearer than others. In October of 2022, it was pretty fucking clear what's going to happen. We talked about that yesterday too. That you start deploying capital, 30%. And if we do make that second leg down, you still have 60% plus 10 of cash in hand. Now we didn't. We turned up. You start deploying more capital, right? Long in the marketplace. The second year of that bull run was pretty clear, right? Second year of a bull run, it's probably going to be up and to the right pretty consistently, right? Coming to this year, not as clear, right? You get a third. If you're like, hey, are we gonna have a bad year? Was that the top in November and December, or do we have range expansion? As a matter of fact, the expectations I wrote for this year have two paths. There's a bear path. I see a bear path, and I see a bull path. The bear path is more like a bear path that has you limit your expectations, but still goes up. Maybe not to the price you want. And it also impacts your approach to the market over the course of a year, right? So, like as an example, last year and the year before, early year, I deployed capital owning the stock market, and I sold options against it. And I got aggressive with spreads, and I got aggressive with day trading. And when I came into the end of the first year, I exited early with the underlying. And this year, I exited early with underlying, and I would turn to spreads. Now I'm coming into 2025, and I write my plan, and I don't care if I'm right or wrong. I just know that I'm looking for certain things to happen or not happen. If certain things don't happen, where does the market go? Down in a major way. If certain things do happen, market is expected to go up in a certain way. And this year's expectations are more cloudy. Let's be honest. We have more volatility likely, or possible range expansion, or possible end to a bull market, or even a possible expansion to the upside, vertical. How do you trade a vertical market? If you get large drawdowns on the way higher, there's a lot of questions about 2025. So I'm adjusting my trade plan for this year. For how I'm going to invest in the stock market. Not only that, but there are macro things coming to the surface. You've got yields getting higher. Yields getting higher is telling me begin now to put cash on the side in a safe investment, 10% with a high yield, which means that money is leaving the stock market, right? To save. And what else is going on in the macro? Housing is coming down. Maybe not where you live, but the numbers that are coming out right now, early before the Fed's telling you, says that the national housing price is lower than the high in 2022. So you're already being told stuff before we ever get there. You can benefit from saving right now. Housing market's heading lower. When you want to buy stuff to make money, right? High risk stuff, it's what? Stock market, it's housing, right? Commercial real estate. That shit brings you a lot of money. And the market's already, all these different markets are telling you, get ready. Have some cash available. Be ready to buy some property and have some cash saved to deploy when you need to. Maybe not today, maybe not this year, but, let's talk about 27 and 28. And they're literally handing it to you in a plate going, hey, what's your trade plan this year? And if it's getting cloudier as time persists, do I look back on prior bull runs where I began to give back all my winnings slowly over time, realizing that I'm not as good as I thought I was? I looked great. I have friends from COVID, 2 sets of friends from that time period, bear friends that gave it all back when the market bottomed. We didn't make the second leg down. We back tested and we kept going up. Gave away millions. We got millionaire friends, bears, that gave away over $1 million as the market raised, right? I got friends that made bank on the upswing in COVID. I got a guy that yelled at me on Twitter once, and then we had a private conversation in DMs. Some of you have access to my DMs. It's a famous guy. And him and I talked one night late. And he was like, why are you saying that about me? I'm like, well, I wouldn't mean you. I meant a bunch of these fucking pump and dumpers. I wasn't trying to include you. He was like, I was like, I apologize to you. And so he gave me his ear and his voice, and I listened to him, and he talked to me for hours. And he discussed with me how he gave back all of his fucking COVID winnings. And I was like, I did the same fucking thing. Gave back a lot of money from COVID. And I don't like doing that. And we're like getting into the long end of a tooth of a bull market right now. And I don't want to give away all the fucking money I made coming up. So how do I combat that? How do I time a top? Right? Who can time a top? Can I? And if I can't, I need signposts like that blue line to say the market is done. So I need to know that stuff as things move forward, right? And wealth preservation becomes paramount, doesn't it? Wealth preservation becomes paramount. And if there's no yields for me to put money into, there's some, but not a lot. But now that opportunity is there, someone's saying that to me. Hey, we will reward you for saving money. Oh, okay. So I'm looking at 2025 and my expectations, and I have some new rules. One of them is to be more patient this year on pullbacks. We talked about most of these rules I've been talking to you about middle to end of 2024. One is in 2025 to be more patient.
So according to sources, President-elect Trump is to abolish requirement for some LNG export permit renewals.
Be patient on pullbacks. Be patient on corrections to enter longs. This isn't, or there's a possibility that it's not that easy, right? We might not just pull back to the daily trigger. Might pull back a lot to the weekly trigger, or maybe even the monthly trigger. Take profit at major resistance. You know, we had a new all-time high every fucking week, right? We were breaking records on new all-time highs, weren't we? All-time high, quick pullback, new all-time high, quick pullback, all-time high. Do we have as many as we once had? Be open to an expanding market, not just straight. Not that it's going to be like that, but be open to it. Or if we go straight up, do we have large drawdowns? Be more selective in what symbols to long. So when you come to the end of a bear market and you start a bull market, most sectors have capitulated. It's easy, right? You buy anything, it's all going up. I was just looking at our index and it's gone fucking stupid. Some stocks have gone up 6, 7, not some, a lot have gone up 600-700% in the last 2 years. I'm not joking. I'll show them to you. And now there's rotation going on late bull cycle. Stuff that hasn't gone up 5, 6, 700%, 300%. So be more selective. If you can't, like, you notice how we come into 2025. I'm going to tell you something that's going to happen this year. You're like last 2 years, right? Everybody's like, hey, my stock's up. Now you're going to start to see a divergence in trading groups. Generally, in the start of a bull market, everybody's same page. Market's going up. We start to come into some questionability of how long the tooth is in the bull run, how long it'll last. And you start to get people saying, like traditional bears going, that might be the top. And then you get bulls that might not be long a stock that's moving anymore. Maybe more than one bull. Start to get like 7 bulls not in a stock that's long. And they see 3 bulls in another stock and that thing's mooning. So they run over there and then it gets sold down. Fubo comes to mind. We actually charted Fubo a long time ago, didn't we? At $1.63, traded to $6. What do? You get out. But all of a sudden, someone's running over there now, and they're like, I'm going to buy Fubo at $6. We were buying that here at $1.64. So you start to get more bulls trying to chase the new shiny thing, and there aren't that many shiny things, and you're late. So now you're what? You are the liquidity, right? So you just start giving your money back. And there's an easier way to do this. You either have to identify the stocks that are going to break out, that have a lot more legs in them, or you revert back to the indexes. Because you can make it easier in late bull cycles just by saying, fuck it, I'm going to trade the indexes. Right? Or you have to identify, it becomes more difficult to identify late bull cycle stocks that have a lot of more leg in them. I'm going to give you an example today. I'm going to show you AMD versus American Airlines and show you the difference. So be more selective. Another thing that I'm open to is that the top might already be in. I don't think it's in personally, but I'm open to it. I was not open to it the last 2 years. And I will be given an opportunity to exit if it is in an orderly fashion. So let's say I get caught in this bull in the top, and I will likely be given a chance to get the fuck out at some point. And it'll be easier to get out of them in an index, like owning the index, low fee S&P 500 index. Another note here is it's very common in the beginnings of a bull run for fundamentals, technicals, for price action, for, I don't know, gamma, fair value shit, for fucking traditional charting, Elliott wave, to kind of not matter. Right? You buy the dip, it eventually starts printing. Everybody looks fucking rock star. But you still practice those fundamental things and use those fundamental tools in those markets to practice so that when the market becomes more difficult, you are not rusty. And you can then begin to lean on those things more and more and more. Another thing is to limit my risk, build cash reserves, invest in low risk savings to deploy in later years like 27, 28, or 29, either in stocks or housing or commercial real estate. I'm not going to get into what I did in the early, mid, or I should say 2010s, but I moved to Detroit. I made a lot of fucking money, a fuck ton. I was buying houses for $1,500, $3,500. They were $500, and they weren't even the cream of the crop. Had I come earlier, I could have bought downtown property, $500, worth millions now. I was wholesaling shit from $1,500 to $3,500 to $25,000 to $35,000. Those houses not renovated today are $35,000 to $75,000. Renovated, $180,000, $150,000, even more. It's a desirable neighborhood. I did okay, but I want to do better next housing cycle, even if I have to move to a new place. And on that topic, I want to talk about stock picks. And we're going to talk about earnings season. We're selling down into earnings season, which is good. GDP looks good. Market looks good. Economy looks good. Business cycle looks good. Consumer looks good. The only real unknowns right now is Trump policy and geopolitics and unknown unknowns. Yields are going up. Bond vigilantes do not see a recession. They see a hot fucking market is what they see. That's what they see. Long-term yields, when we did 50 BPS, are up. That is not what happens when we're entering a recession. So that would mean we're still inside of some kind of a hot-ass market. You haven't been broken yet. You're still willing to spend $20 on a rack of eggs. You're still partying. I looked at Electric Forest this year. Cost 10 to 20 grand to go. Bonnaroo, 10 to 20 grand to go. Who the fuck's got that money? I ain't got a cap. Bullshit. They're all sold out. I'm looking for tickets for my kids to go see some guy named J-Hope, some K-pop band. Tickets released yesterday. $5,000. Who the fuck is paying for that for a kid? People with money. Grinding higher right now, trading 592.35. They don't want to print them fucking fours, do they? Those 94s. They're like, fuck you, you got to hold them all day. So we got earnings coming up. We're in a time period where you can't just pick anything for the year. There is risk that the top is in. There's also risk that we could have violent downside moves. It's not there that's going to happen yet, but you can't tell me that we aren't looking at a fucking rate hike this year or next year, late year. We're looking at one right now. The pieces are in place. Hasn't happened yet. Pieces are in place. So there is some risk. More risk than there was the last 2 years. I might be better off holding in case it is the top. Actual physical stonk. Quality stonk. Stonk that I don't mind holding if I get caught. I don't want to give it all back in spreads or options. I remember during Tesla. This was a decade ago almost. They had their first run up. And then for like a year or two, they went sideways and down. People had invested all of their money into leaps. And those leaps were worthless. Those leaps have came back. Made a bunch of money. Made millionaires overnight. Those people have 1 million followers on FinTwit today. They used to hang out on Reddit years ago. So unless I'm doing leaps or owning the underlying on this stuff, I don't want to get caught, right? And pity party for 2-3 years. So I have to have quality. I have to have stuff that looks like it has more legs in it. High probability of printing. And I have to think about some other things here. M&A season. We had some of the worst M&A years in our history. This year, they're cranking because of Trump. Deregulation.
S&P Global Ratings notes the U.S. tech sector attempts a cyclical rebound.
Stonks that haven't benefited from deregulation, maybe didn't participate in this part of the bull run, maybe begin to participate. Policy change that's actually positive for the stonk market. Earnings, GDP. Who benefits from M&As? Who benefits from deregulation? We have more bull market left. What do I not mind holding if the market goes down? Has to be quality or it has to be an index. If they don't give me an exit or I fail to see the exit,
for non-farm payrolls,
can I live with owning SPY for 4 years, 5 years?
for a year's worth of our service for the price of 1 month and save 92.
Will Roku be here in 5 years? I don't know. Will SPY be here? Yes. Is it boring? Yes. Then Q boring? Yes. A little bit more not. A little bit more spicy. But it'll be here in 5 years, 10 years. Wealth preservation becomes more and more paramount over the years. GS talks about the phases of AI implementation and how they rotate in and out in these phases. In this outlook, I give you the actual tickers that they are looking at. CNBC is famous. Every winter, right? They come out and they tell you there's still more room to run in this stock. It's AI, baby. And they dump into you. Liquidity, boom, boom, boom. They do that. I'm telling you, they do it every like second, third year of a bull run. They do it. They go on, they go tell you like, this thing's got a lot more left in it. And they sell into you. GS put out a list of stocks that went public in December. They literally sold into those people the entire month, but they're ready to be traded up next year. One of those stocks from GS, had you bought it when that GS 2025 outlook came out, you got annihilated. One of them was, let me see if I got this right here. Make sure I got this right here. AGIO, part of the 4-phase AI investment strategy, right? This is AGIO. Great ticker, by the way. Beautiful ticker. I love these tickers. Start down here, super ramp on launch, right? Spec growth, moons. Trades $124. Woo! $139. Another spike. A recent-ish IPO. Trade $100. Woo! Trade $62. Come into December. This is on the GS list. come into September, just like CNBC, what do they do?
At 2 p.m. Eastern time, we get the
Here it is right here. Start of December. End of November, start of December. Buy, buy, buy. Oh, nope, fuck you. All the way down.
Qatar's PM says work is continuing with Israel and Hamas on
But where is it right now?
of the deal.
It's almost at a buy point. This is part of the bank and institutional buying. You can see they bought it down here, bought it here, bought it here, buying it down here again. This is where they are, down here. Imagine being a sucker buying this in December. $60, now trading 33. Maybe we need a little bit more capitulation.
Qatar's PM says the ceasefire will take effect on January 19th.
We also have a bunch of great triggers here, don't we? We got like a monthly trigger turning up, weekly trigger turning up. We know where the buyers are. A little bit of patience, right? Talk about patience this year. Then we can get this AGIO a little bit lower, right? Tag that buy zone down there. $30, $17. If you got $1,000, you allot what? 300, 300, 300. Starts running on you. You then drop another 30, right? 300, another 30, right? 300, right? Same thing. Just like the bottom of a bull run, right? Or a bear run coming to an end and a bull run starting. Nice place to be buying for 25, right? The list of these actual tickers is inside the 2025 expectations. Not a bad looking stock. I like it. I like the fact that monthly and quarterly velocity ramped all the way down and is now flattening to turn up. These are big momentum shifts. Who are these buyers? That's all fucking hedge funds, isn't it? Come down here, start riding high. I'd love to be a buyer down here. Can I own this at $30, $17, and not feel bad? Probably not. I wouldn't feel bad owning that stock. Yeah, it's spec growth, right? It's like biopharm. It gets crazy. Shit gets crazy. Dollar for dollar, is AMD going up $300, $400, $500, $600 this year? I don't know. I don't think so. But if you're buying something for $17 and it goes up to 80, we already hit 60. We hit this one up here. That's 100. That's 500%. I'd take that bet all day long. AGIO, a little bit more down to come, but, you know, $21, $17. If this stock runs away from you, you don't get your buy, that's okay. If you have 100 of these or 1,000 of these different tickers, symbols. If this one happens to come down in your buy zone, hey, let's go, let's buy, baby. Let's get some. If it runs away and you don't deploy any cash, that's what it is. So what? You missed it. You got 1,000 of these with alerts. And be patient. Here's another one. CNB bullshit. CNBS bullshit. This fucking stock right here peaked out, right? $227. What do I tell you about stocks that break below and confirm the break underneath the monthly trigger? They're in a fucking bear market. So you're telling me that you want a long AMD, even if it goes to here, to retest that shit? What is that? I'm going to buy it for $100 cap and take on the risk of the top or the late bull run being over, cap. It's going to go up 74%, cap. That's good enough for me. How about if it doesn't? Elliott Wave says that it's going down here, 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 and right here. I think it actually has one more, $60. It's got a target like $60 down there. What if it doesn't perform? What if you own it at $100 and by the time it goes to turn up, it's more like this? Down to 60. And then you're consolidating for years. Sitting down here. That would suck, wouldn't it? AI bubble over, and then it starts to trade normal again. I don't know if that's going to happen, but it looks like it. This is knife catching. Fucking knife catching. What is this down here? Consolidation. Are you trying to buy a knife, or are you waiting for some support to take the trade? Are you wasting fucking time in here, or are you jumping in right here? Is your time valuable, or is it not? This is in decline. As a trader and investor, you think that looks good. It doesn't. It looks like dog shit. And I don't give a fuck if you come back in a year and say, well, it went up to, test those all-time highs, Cap. What I do like is deregulation. I do like M&As. This is American Airlines. Yeehaw, daddy. Trade $60. Consolidation phase. Would have sucked to be in here. Would have sucked to have been sitting around here. But what happened in here? Price started breaking up. Monthly started flattening and turning up. Price started breaking. Where do we go from here? $348 to $53. Dollar for dollar smokes AMD. Still vertical on monthly, weekly, quarterly. Goes up for even more. Trades $57. What's going on now with AMD or with AAL, with American Airlines? Well, we're coming into deregulation and mergers and acquisitions, and we've got airlines collapsing everywhere. We've got all these shit airlines going down, but they never joined in the bull market. They've spent all these years just buying down here, accumulating. Who the fuck's doing this? Market makers. Buying. And what looks like is happening? Looks like we got some verticalness, but maybe it's starting to turn up here, right? All of a sudden, we're testing these higher triggers. Now, they sold off of this white trigger here, right? This is the 6-month trigger. They sold off of this. Right? So I got to be cautious up here, right? I don't want to be buying this right now. Made a good run, though, didn't it? August, all the way up to January. It's been fucking cranking. Didn't get sold into. It's trying to break out here. You notice how these triggers are trying to break out. The 6-month crossed above the quarterly. And this 6-month is right here, and this quarterly is trying to break out. And what else is happening here? We got some other momentum underneath. Weekly, monthly, daily testing. We got a big old gap up here. Trading $18. I actually would prefer this, wouldn't I? Fail this 6-month, weekly, monthly picks this up. Start trading this $28. This looks like it's done going down. What are some targets that we have? Ooh, pretty up there. $60. And we got a high back here. Look at that, a high and a high. Higher high. Well, shit. What's that, 80? 60, 70, 80, end of year. Deregulation. M&A. Start breaking out here. start seeing these triggers come up, start getting, yeah, I could do that. $70. If I can get a rejection down here and buy it for 8, 10, 20 bucks, that's 600-700%.
So according to the Fed Beige Book, more contacts
It's not 70.
optimistic about the outlook for 2025 than were pessimistic about it, though contacts in several districts expressed concerns that changes in immigration and tariff policy could negatively affect the economy.
We already hit this PT market grinding higher and higher and higher right now. 2 o'clock in the afternoon on the button.
Modestly overall, with growth rates ranging from flat to moderate.
We know that at 2 and 2:30, before we find out at 3 p.m. if it's power hour or sour hour, we don't have a lot of time left for bulls, do we?
So note that this report was prepared at the Federal Reserve Bank of Chicago based on information collected on or before January 6th, 2025, and thus before the wildfires in the greater Los Angeles area started.
This morning we had JPM, Citi, BlackRock, Wells Fargo, Goldman Sachs, BNY report. After the bell, we get Concentrix, Synovus, HB Fuller, Hyatt. Tomorrow we get TSMC, United Health Group, Bank of America. In the morning, Morgan Stanley, Bancorp, Infosys, First Horizon, PNC, M&T Bank, Insteel. After the bell tomorrow, we get JB Hunt, Bank Ozark, RF Industries, and then on Friday, before the bell, we get SLB, Regions, Fastenal, Truist, Wipro, State Street, Citizens, Independent, Sci-Fi, and Webster Bank.
And employment ticked up on balance, and 6 areas saw no change, according to the Fed Beige Book.
That's what I want to see happen right there. I don't know if we can get there.
Protect your trades from macro headline risk.
This is where let me show you where my concern is here.
$99 a year for our real-time service.
Here's Q's. Target for Q's was, I don't know why this is getting wonky. This was from last night's brief. This was the target for Q's right here.
And the Beige Book notes that
It held
increased modestly overall, and wage growth picked up.
We got the target. It held its daily trigger. Do we get the extension up before the roll? Extension up. We're trading it right now, so you can see it. Logical place, 519.49. We are retesting the prior high on Qs right now and the prior high on SPY. If we can get above the prior high, the way is not down. That would mean that naturally we're going to trade up here to 519, 520. There's also an R3 up here at 518.20. And that is this R4 right here. Said PT2, but let's make this PT2. PT2, PT3. How about we lower expectations? We'll make this the extension, okay? Well, this is the extension. Let's look at something else really quick. The reason I'm saying up here is because this is SPX gamma. And SPX gamma has a resistance point just above and a call wall. All the big boy sellers up here, right? Old men sellers. And nothing but an air gap all the way up here. Big air gap. That's 6,000. If you look at SPY, not SPOOs, this is all SPOOs, but that's where the sellers were. Right? That's where the sellers were. That's where the sellers are. Where are we grinding to right now? This is tomorrow. Retail sales. Note there's a prior high here, so there'll be some resistance. Prior intraday high. This was our first target. We already hit it earlier. Oh, and you guys have questions for me in Discord. I apologize. Hold on. Young trader. I've blown up 10 accounts since 2020. Fuck yeah, brother. I never thought of writing my own briefs. That's actually genius. Yeah, you should. Fuck yeah. Cap, why can't you trade inverse ETFs in a bear market instead and treat it like a bull market? I guess market movement and fundamentals have a different character in a bear. Okay, it's a good question. So a lot of people do very well trading both sides. Some people don't. Some people are buy curious when it comes to the market. They can sell, they can buy. Some people can't. Some people are only sell side. Some people are only buy side, right? There's something else here too. When we go into bear markets, I love buying bear 0-day puts. So listen to me closely. I love 0-day puts in bear markets, but I'm a better buy side trader and investor. So even in a bear market, there are seasonal lows that can be bought successfully. So I get buy in bear markets, normally buying call spreads seasonally on seasonal lows. There's usually about 3 or 4 great opportunities even in a bear market. And this is a bear market, not a crash. There's a difference between crashing in a bull market and entering an actual bear market. In a bear market, I tend to do 0-day puts. I make a lot of money doing that. And then I do buy most of my serious money. I do with seasonal buying on major lows, oversold lows. In bear markets, I'm known for not making fun, but a day or two before coming out and saying, look, on CNBC tomorrow, what's his face there from New Mexico? He'll come out and he'll say, We're still bearish, but we have to buy here because we're oversold. I forget his name right now, but he has like the goofy ass shit on. I forget his name right now. Some of you guys know who he is. But he goes on CNBC. He's like ultra bear forever, and he's like, we're long right now. We've sold too much. Those are typically seasonal lows in the stock market. I do not trade inverse ETFs in bear markets. The market, in my view, is up and to the right. Whenever I get into that bear mode, I don't like it because I've lost too much money over the years being bearish and given back too much money. My biggest blowups were always as a bear, like full account blowups, bear. Always as a bear. So I don't trade well, generally speaking, that way. What else do you got? Only if it was easy, 100%. That's all I've got for you guys right now. Okay, so let's try to answer some questions inside the Discord. So you guys see where we are. We're trying to head into the close today to get up there to where those real sellers are. And they've been working this shit up there of like clockwork, right? I think they've been successful 3 or 4 times. They're up there waiting for us right now. Will they be successful again? I don't know. We will de-risk once we get there and let the market show us the way higher or lower. We're getting there. We're almost there. Close. They're right up there. That's where they are. They're hiding out right here, and they're hiding out right here. Maybe they're here today. Intraday double top.
Oil futures extend gains. U.S. crude prices rise to the highest since July 2024. Brent crude up by $2 a barrel.
Well, you know, I got one thing for you, Goliath. So one really cool thing is PMOs and PPOs can tell you on 2 time frames, they can tell you or they can give you some idea for like top major market tops and major market bottoms. They can give you like an idea. Market breadth, though, you're talking about market breadth. Market breadth doesn't care, does it? I'm with you on that. Market breadth indicators, they don't care if it's a bull or bear market, do they? As soon as they're oversold, even in a bear market, you can usually buy it and go up, right? That's what I like about market breadth indicators. They work. They work better, in my view, on the upside than the downside. But I do like using that market breadth indicator specifically in a bear market, brother. Market breadth indicator does not care about trend, just cares about oversold conditions. Dan Niles. That's who I'm talking about. Fucking Dan Niles. Fucking Dan Niles is my guy every bear market. Dan Niles. Right, that's right, Cowboy Up. You've been here since the beginning. Dan motherfucking Niles. We're gonna have to dust his name off soon, aren't we? Ah, yes, Dan Niles. So, like, we did this in the show yesterday, Goliath. I showed you guys in the show yesterday, like, monthly PMOs. PMO, PPO on a monthly basis will show you the de-risking by institutions. But if daily PPOs and PMOs stay above the zero line, market will still trade higher. If you begin to see PPOs and PMOs make new lows or large lows on a daily basis, like 25, minus 25, minus 50, consistently, the market will begin to top. But we have many examples of higher time frame PPO, PMOs de-risking, yet the market continues to trade higher. We're in that phase right now. I did it in a private stream yesterday. If I have some time, I'll show you that. You guys want to see it right now? It's not that accurate, but it's a good indicator. Right now, they're de-risking. We're in a topping process, but that topping process could take a year or more. Triggers velocity are not topped yet. There's like a back test thing and a weekly weakness that we have, but we're squeezing on higher frame velocity. So velocity is still bullish, and triggers are not warning of a top yet either. So trading 592.85 right now. Yeah, no, I understand, Goliath. This is a lot of information. I watch that shit in the background to see if there's any indication. So I'll tell you if I see that shit. If I'm like, oh fuck, they've got a divergence on daily and monthly PMO PPOs. I watch that shit. I go back and check. The more accurate thing to be watching, of course, is triggers and velocity and higher frames. And we're not there yet. So, okay, here they go. Here they go. They're going to try to call a double top here. Babe, stop shorting double tops. It only worked the past 3 weeks, 4 weeks. Top is in. Trading 592 right now. I'm going to raise this one up right here. Just want to see if there's a slight, we're able to get above this or not. We want to see price jump. If it can't jump, that's no bueno. Watch this very closely here. Dan Niles, Chamath's third cousin of equities. Got to write that one down. Oh, what's going on there? Uh-oh. Oh. Oh, let's see here. $2:30 doom hour. Dealer's favorite time of the day to flush the options market. Nothing down there, is there? It's just like fucking. There ain't shit down there. There ain't shit down there. Woo! That's a little bit down here. Let's go down here and look at SPX. Gamma flips right here. Decision time going on. This is SPX Gamma, by the way. High, the new high. It's not showing the new high on SPOOs. Actually, nope. It does show that we didn't make the new high. Just notice here, there's no new high on SPX. The island is right here. Here's the island. You lose that island and whoop, straight down, whoop, close the gap. So you can see it here. Big old gaps to fill. Put wall way down here. I posted this in the Discord for you earlier. Question becomes, do we trade this? Or is it a trap? Here's the island right here. So we're going to talk about some stocks that are beginning to report. Swinging back into that. We have TSMC reporting tomorrow before the open. We're going to take a look at TSMC. Let me take a look here in the background and see if I can find anything for you for tomorrow. And we'll look at next week too, if we have the time today. And if I have to, I'll stick around. What the fuck was that? What was that post? Who was it? I can't read that. Hold on, I can't. Who? That's right, Ted the Shark. Goddamn right. Oh, 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 where are we going here? Oh, what are we doing? Ruh-roh. Ruh-roh. row. Oh God.
Diesel February
Oh
futures
God.
$2.61 a gallon. NYMEX
Do you-
gasoline
do you-
February futures
Do you need some lube?
cents a gallon. NYMEX natural gas February futures settle at $4.08.
Ooh.
NYMEX WTI crude February futures settle at $80.04 a barrel. That's up $2.54 or 3.28%.
Do you want to stay up to date with the latest? For a year's worth of our service for the price of 1 month and save 92%.
Why is this not working? Kind of like wonkiness here. try this again. I don't like that either. $0.38.
Don't give me lip. That's what you get when you act a fool. Just one of these days, you're gonna get paid. Better watch your back. It's gonna get personal.
That fucker flips over into in the money. It's gonna be like worth like 90 fucking cents.
You don't. It's gonna get. It's personal. Better watch your back. It's gonna get. It's gonna get personal.
When I hear it coming up like that, I just know that things are gonna end bad.
So trashy.
Body only moves for the beat. You've been waiting for me. I'll just keep dropping it, like there's no stopping it. Then walk with it, la 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 la. I'll just keep dropping it, like there's no.
Q's trying to trade our 3 at 518.20, high target 519.49. SPX raising or cranking higher into the call wall at 6,000. Where's Addy? Discord wants you, Addy. Where are you? That's so trashy. We'll change it.
Now move your body. It's just a beat.
leave this call wall up here so you can see it. I'm gonna put it on in 1 minute so you can see it up here.
Move now, move your body. It's just a beat.
There's a little bit of a cell signal up here. There's some hidden bars up in here. There's a hidden bar right here, but be conscious of this bar and this bar here. You're looking for a place to take a little bit off. There's 1, 2, and 3.
Now move your body. It's just a beat.
You guys want some sexy? Hoo-wee. And just note that bar down here has not been filled. Just keep an eye on that, okay?
Make it timeless.
I don't know what that is. Big man wants to no lube me. .5% NQ hide. Yeah, that's what I was thinking. The same thing. I'm Doug Fuller.
Brent crude futures settle at $82.03 a barrel. That's up $2.11.
We're either going to do it this time or the next time.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
I got this. So the music that I play here is I can't play. I have to pay for licensing. All this music I pay to license every month. So I'm only allowed to use this because it's AI music. There's no it doesn't come from actual artists. So they can't ding me. I used to try to buy like mainstreamish recorded music. I'd pay for it, and they would still ding me. It was a nightmare. It was like whack-a-mole. And then I would have to fight it, and I would catch strikes if I fought it, even if I had the license and the time. Then I had another problem. Was licensing music from YouTube in particular, and the license would expire. Then they would take money from me. I don't make a lot from YouTube. Like it ain't much. It's like, I don't know, fucking $100 a month or something. And I don't run I don't do any sponsorship shit. I don't do any merch. I don't like pedal products and shit like that, like Ginsu knives. I get asked a lot. I get emails all the time about that shit, like from like gambling websites or NFTs. I get emails for all kinds of stupid shit. but they would like ding me, and I'm like, well, what are you gonna do? Like take the $5 away from me for some stupid shit? So now I just pay for a license on AI, and I haven't been dinged. It's the only thing that I haven't been dinged on. And then the fucked up part was YouTube. Like if you license music through the YouTube or through YouTube specifically, those licenses are really fucked up. They're like good for the one viewing, and then like a month later that the license is gone. They pull the rug on them. Even like lifetime free licenses. So I had problems with that. Then I fucking paid for licensing through YouTube, and there are trolls out there that'll try to hit you for the licenses on that stuff. So now I pay a company that like uploads a license directly to all the streaming platforms, so that can't get fucked anymore. Like there's these like Chinese and Russian bot trolls and shit. It is a disaster. So this is the easiest way for me to play music, basically, without getting fucked. Like they'll like block my videos and stuff. You can't view them. There used to be ways to get around it, like Twitch doesn't record the video immediately, so you can mute the music later on for a replay. YouTube, you can't. They record from the actual live stream. There's a bunch of different rules depending on where you stream. So now this is so I can't play like a mainstream song anymore. So I play songs that I license and then upload the licenses to the streaming platforms. It's like the easiest, no-brainer way to do things. Music sucks in general. Even like I've had people offer me music, like they compose music, but I've had composed music where I've been giving the rights. Trolls come after me for that too. It's all fucked up. So the streaming music industry, or music for streamers industry, is consolidating and fixing all this stuff, but music rights is a fucked up thing right now in the world. If you try to use music, I even like so I was playing a song that was outside of. It's so old that there's no rights to it anymore, and I still got dinged by trolls for it. And I'm like, motherfuckers. Sorry, I shouldn't be saying that, but like, it's like, can't even win with songs that are in the public domain. Like public domain shit, you'll get dinged for that shit too. Like I basically have to like sing to you or play. Maybe I should try that. I used to play guitar a long time ago. I got a guitar. I can try to play a song. It'll suck, but it'll do like intro music. My daughter plays music. I should probably have her play. You know what? Maybe I'll talk to my daughter and have her record the intro for me. I could do that. She could do that. She's a good musician. My wife's a musician too. She used to be a really good piano player. That's what I was thinking, Winky. Fucking like a drum machine, like the drum, or do like the piano guitar. And just make a few beats up, right? And just do it live on stream so nobody can claim they own it. I don't care how trashy it sounds. Okay, so getting back really quick to earnings. I keep getting off track here. Let me just take a quick peek here. Dude, you guys want to hear a fucked up story? I bought 100-pack yesterday of calls for 20 cents. They got buried into the clothes. Normally, I would hold them into the clothes even if they died. Normally, that's what I do. One day, I don't do that. They were down to 5 cents from 20. They traded $1.08 into the bell. $1.08 into the bell yesterday. I was very upset after the bell yesterday. Fucking furious into the bell yesterday. Left $10,000 on the table. And took the L. And I lost money on another trade. It was like a combined trade. And I walked away with my fucking tail between my legs. Would have had a pretty significant up day to start the week yesterday. I was pretty angry about it. And they ran it up, ran to $4.15 to $1.08. Oh, I was so fucking pissed. And if something burns on me, I normally just leave it to die. And I didn't this one fucking time. I was like, fuck. All right, let's look at some of these stonks for earnings. What do we got going on here for these earnings stonks? Okay, TSMC. Let's see what they're looking like for tomorrow. We'll start with TSMC. See if I can see anything here. Oh yeah, TSMC. What's going on with you? What am I doing wrong here? Doing something wrong here. I know that's trading 349. Super fucking bearish. Hold on here. What am I doing wrong here? Fuck is going on with this? Okay. Having some wonky going on. Huh. Am I doing something wrong here? I can't see shit here. See what we can see here. We traded TSMC up to 209, 208. On here. Go to a monthly basis. Oh, no, let's first start with first let me just take a peek here in the background. Dude, what are you doing? Sorry about this. I'm having some issues in the background. Please do. Okay, let's have a look here. TSMC. We should take a look at this. Hold on. We should look at this one together. I get these wrong, okay? So don't at me if I get this wrong, but we're going to take a peek at this. We got TSMC coming up before the bell tomorrow morning. No, I get these wrong, so don't be freaking out. But if I get this wrong and we squeeze tits off, but let's just take a quick look at this. On a daily basis, TSMC to me looks like sell the news tomorrow in the morning. Now, if we are squeezing up right now into the close and you get a bad retail sales and TSMC doesn't trade well, tomorrow we could have an issue. Not only that, watch out, we're coming into the 3 o'clock hour, sour power hour. But like TSMC, what I don't like about this stonk right now is this right here. Now there's more room here on what is positive is on a quarterly basis, there's more room to run. More room to run here. You can see that TSM still has more upside potential. That's positive. There is some de-risking going on here in the background. You see this? Under the surface on a weekly basis, even though the stonk is rising, I want you to know that there is selling under the surface of TSM, okay? There is selling going on. When this thing does crash, it's going to be a doozy. Just warning you of that right now. This is common late bull cycle. Another thing that I don't like is we're at a 5 right now on daily velo here, begging for a bad report tomorrow. Don't like seeing that either. Now we're going to look at a 30-minute basis really quick on TSM. And we're going to look at intraday type velocity stuff. And matter of fact, let me just get rid of this. We did this before, right? We had a big downside move right here. And we've had higher velocity intraday basis going up. This is positive intraday. TSM doesn't get too bearish either in here on a daily basis, but we are losing velocity on TSM. You can see it. We're kind of neutral, but intraday looks good-ish here. So it's kind of a hard one to read right now. Let's take a peek here and see if we can divine anything else on this stunk. On a 1 hour basis, it just keeps moving, doesn't it? 1, 2, 3, 4, 5. 1, 2, 3. That makes sense. 1, 2, 3, 4, 5. 1, 2, 3. It's bearish on account, maybe, possibly. Hang tight here. Pivots. I also don't like that it's traded up generally. Let's hide pivots for a minute. It does like its daily trigger. That's nice to see. It did sell down from its December. This is January 6th. Sold down, right? I'm open to this being bullish on their report tomorrow morning. And then a sell the news kind of a thing into the weekend, closing that gap. But I would like to see that get closed, okay? So bullish on TSM, sell the news after the report to their weekly trigger. Let me just take a look at this once more. And the reason I'm saying sell the news on it is because the weekly velocity is negative. So be careful on this TSM trade. Price target tomorrow on TSM 219. Close the gap right here. Let me just take a peek at this. And some other frames here. Kind of in the middle of the road here. And that's that weekly trigger. You could make an argument. Trade to 197. Trade 219, 197. That argument can be made. Kind of in the middle of the road right now. It's the high end. There's a gap to close right there on a weekly basis. And there's some, you see these sellers up here? It's a daily basis. They're up here. They're going to try to unload into you tomorrow. Let's check this on a weekly really quick. And there's the support is down here. Yeah, so I think I got this right. Yeah, I think I'm pretty clear on this. Let's just check this one more time. This is, you also have 4 hour sellers up here. I said to you 219, you might, if you get an outstanding report or a halfway decent report, you'll get the 218.12 extension. You'd have to have like a blowout report though. There is a warning to be had here on TSM for tomorrow, or TSMC. TSM is the ticker symbol. There is a warning in here, which is we should talk about this. So let me go back to SPY really quick, and we'll just chat about this in the background. So TSM is so parts of the market are in a distribution phase, even if price is not reflecting that distribution phase. Okay, so let me explain that better. Stonks that went up and up and up and up and up for the last 2 years. CS from the Discord made a great. He sent me a DM, and it was a chat log from a Bloomberg terminal. And in the chat log, there was a mantra that was being discussed, and we often see this on shooting star and hammer candles, like green hammer candles and stuff, like shooting star hammer candles side by side on daily candle charts. And basically, what it is you've got a stonk that is topping, and it doesn't mean it's the top. You'll see oftentimes a bear will begin to short it, and it'll continue higher and squeeze higher, stay irrational longer than you can stay liquid, right, or whatever. And the institutions will begin to leave. So the hedge fund market makers that are buying it at bottom will run it all the way up, and then they will try to protect profit. And that was the mantra in that discussion on the Bloomberg terminal. I made so much fucking money, then why the fuck do I want to give it all back? In that post in that DM, there was like, hey man, if you put 10 million in, you made $3 fucking million this year. Are you going to give that $3 million back to people? Get fucked, right? Why waste it on TSM? And they're one of them. So I'll say this to you. Under the surface, can TSM squeeze or smash to the upside tomorrow? Sure. Is there likely Wall Street involved in that trade to the upside? No. And here's the deal. If they get a bad report, because there's nobody there, and being a retail bag holder, it fucking moves to the downside when it finally gives itself up. Hold on here. I'm having trouble here with my chair. So it's kind of like a mixed bag here with TSM. It looks to me like it'll trade that 216, 219, 219, 218, but it also looks like sell the news. So that's the one danger when these large institutions are gone or leaving. Now, they haven't left on a higher frame like monthly and quarterly, but they are leaving on a weekly basis. So there's probably an institution out there saying, hey, look, I'm going to start deleveraging on TSM and wait in 2025 for a major correction. I don't know if I'm going to get that in the spring, the fall. I don't care. I'm not going to give back $3 million fucking dollars. Fuck off. So there is deleveraging going on in this ticker. You might be saying to me, that's no fucking way, Cap. Just take a look at AMD. That's all you need to know. It's not there yet, but be careful of a rotation out of that ticker into either it lower or into another phase of AI. I like TSM, but just note that there is some deleveraging going on under the surface, at least on a weekly basis. It's losing its upward momentum on that weekly basis. So TSM, price target 219, 220. I think that's reasonable, but I would definitely be looking to sell the news on that one if it goes up there. I don't know that it'll hold. So maybe you can catch that in cash market being in a Thursday before the opening bell, kind of a trade. Next one that I'm going to look at with you is, I don't know why this isn't up right now. We're going to look at, next one we're going to look at for tomorrow is, do you guys want to do UNH? Luigi, UNH got fucking annihilated. I'm bullish here. I shouldn't say that. It's gonna piss people off, but I am bullish on UNH. I like this trade for their earnings. They shanked it, of course, public perception. And they are an evil fucking company. I'm not disagreeing. I believe in universal health care. I do. I look at it like the fire department. I think we can do it better than any other country out there because some countries are successful. I am bullish here on UNH, just looking at it with nothing else, not knowing anything else. I like the stonk. Now, they've been deleveraging too. This is a good one to look at. Let's look at this one really quick. So, now one thing to say here is they've been deleveraging for a period of time already before the Luigi stuff. But in particular, do you see this weekly basis right here? This is what I'm talking about. You see that weekly? How it was deleveraging and the price of the stonk was still up. Do you see that? Whoop, stonk's still up, stonk's still up. Starts deleveraging, price still going up right there, right? Deleveraging, then all of a sudden, boom, pull the rug on you, right? Stonk goes down to zero, not zero, but it gets fucking annihilated. Now, what else is interesting is I can't tell if we're going into some really bad shit down here. You see all this bad shit down here? UNH is getting fucking, this is very bearish here. No bueno. And I'll show you what that looks like over here when that happens. What happens to a stonk when you start seeing this shit? When you start seeing stuff like that, the stonk gets fucking hammered.
Extend gains.
And I want to show it to you really quick what happens. You might get these squeezes up on good news, but then woof. And you're talking about major. This is like, what, $43? Went down to $11. 75% of its value gone. That's important to know, too, here on UNH. And remember, everything is accumulation. Everything is accumulation and distribution, right? What does this look like to you? This looks like what? Top, right? Invert or head and shoulders, right? Woof. Downside. This is a fucking stay away from it stock, okay? Very dangerous. Over time, I would not, like on higher frames, this thing is ready. Prime candidate for some major distribution to the downside. Mostly probably assigned to Luigi and all that other shit, right? They've got some really bad press going on. So what I would say though is this looks like you're being allowed to be let out, right? Like here's your return, and then we start the trade lower, or maybe people forget about it and we start going higher again. Maybe I'm wrong on that distribution, but that shit looks classical. You usually get a chance to get out. So let's look at this on an intraday basis. It's trading 545. I want to see it trade 595 tomorrow. I like this trade for tomorrow, even if I'm against this company. They got some big green hammer candles, big hammer candles down here. All looks good. We've got the daily velocity coming up, weekly velocity coming up. Maybe we just boom down over here. This is April 2. So if we get a run for April into April and then it comes back down, right? I like this stonk heading into its ER tomorrow, UNH. I'll look at it on a 30-minute basis for you. But if you can put your ideals and all that kind of shit away, I do. Let's look at this on velocity at least. Daily velocity looks fucking sexy. So, yeah, I'm bullish tomorrow on UNH. Now, I want to remind you that could still be they miss or something like that, but I like this stonk for its technicals for a trade tomorrow. Price target tomorrow, or price targets in the next couple weeks. You might hit tomorrow like 565, but in April, I would expect it to, into April, I would expect it to trade 600, 607, possibly come up here and trade like 620 or something as a high later on. And this might be delayed. You might see something where it trades like 560, 570, back tests. So maybe put some more time on that trade into late April. And pull the rip, make it a call spread. And if you get below this stuff over here, you get below like the daily trigger in 530, maybe consider pulling the ripcord. And that could be more or less due to sentiment and stuff like that. So UNH, that reports tomorrow. I'm very bullish on that one too. We'll go back, or more bullish on that one than I am on TSM. So if you want to put me on for like kind of bullish with all the news on TSM, I'm bullish in general here on UNH, even though I have a moral and ethical issue with that company and others like it, of course. So just heads up on UNH bullish. If you wanted to wait on someone's saying the calls are expensive on UNH, what you could do is let them hit the high tomorrow, sell down into that 530, and then buy a spread there for late April. You could do that too, so you don't get wrapped up in that ER kind of a trade. So personally, bullish UNH. What else do I have here? Critical Parallax sent out some homework yesterday. Who wrote that? Good job, Critical Parallax. Where's that post? Why did he delete it? Leave that shit up. Always love. Always love DD. Critical Parallax saying winners ISRG, Hood, HWM, TSM, and ARIS. Mention ISRG, vol plus 325%. PI, SQQ losers. Mentioned Tesla Q. TSLQ. I shouldn't say that. SPY grinding higher right now. Grinding higher. We also have Bank of America, Morgan Stanley tomorrow. PNC is another big one. We'll take a look at some of these, and then we'll look at Friday. So let's look next at B of A. Yep. Yeah, B of A. Jesus. They priced that shit in. Sell the news on B of A. Ticker symbol BAC, in my view. I want to talk to you guys quickly about bank stocks, okay? Bank stocks are kind of fucking funky, right? If they sell down into their ERs, they tend to squeeze afterwards. If they're ramping into their ERs, even if they get a good AR, they sell them. And they sell others, and they sometimes sell just before their ER. This looks like they ramped B of A because we had good bank reports. So they're preloading a good report from BA based on other reports. I would be wary of B of A or of BAC tomorrow. I haven't looked at Morgan Stanley yet. I'm going to assume at this point that they've already they already pre-did this one too. Maybe you catch another $2 or $3 on this one. I'd be looking to short those two stonks. People take their money and run on those fuckers a lot. So this is my take on B of A and Morgan Stanley. I expect them both to go up tomorrow. I would not be a buyer. I would be sitting above them, looking to short them on good reports. Give it a minute to short. There is going to be some natural places to short them. I'll give you two targets for Morgan Stanley, 133 and 136.39. Yeah, not even 136, just 133. They fucking pre-ran these things up, so they're done. In my view, they're done. Hold on here. What else do I have for you guys? JB, anybody care about JB Hunt? Anybody care about State Street or Citizens? I'm going to assume that Bancorp is the same bullshit. If you don't care about those, I could look at next week's reports if you want. Let's see here. Actually, I got to do something before I look at next week's reports. I'll do those tomorrow. SPOO's grinding higher now. Just keeps grinding and grinding and grinding and grinding. 40 cents outside of the money on 94s, PT2. This is 4 p.m. I'm going to give you guys my expectations right now for tomorrow. It's 3:16 in the afternoon. Looks kind of like a squeeze power hour so far. Trying to slam into supply on the upside. We're going to talk about expectations for tomorrow. So we've got retail sales in the morning at 8:30, and then we have I don't know what we have on Friday. I don't think it's something big. We got retail sales, export import prices, initial claims. We've got some other jobless claims. We got Philly Fed stuff for employment. So we got some minor but important stuff. A big one for tomorrow is going to be the 30-year mortgage rate at 12 p.m. And then Friday we get building permits and housing starts. There was some talk today from some of the Fed heads discussing that they don't have any impacts on the housing industry. We also had some fires happening. We had some hurricanes. Housing market is light right now too. So that's on Friday at 8:30 in the morning. Technically speaking, for tomorrow, we got to chat about tomorrow. Okay, let me just give me a minute here. Let me go to a trigger screen, and we're going to go to a 1 hour basis here. Remember that these reports are preliminary, and a good example of a preliminary report was yesterday. I gave a preliminary. They don't change often, but when they do change, they change. And it changed yesterday after the bell. Not after the bell. The last 10 minutes changed our expectations into tomorrow. So if you do want market briefs from me, I write you a quick note every night, or most nights, or when they're required. I don't know if it's required, but whenever there's major changes, I'll do one. I also do a weekly expectation. And I also give even farther out expectations to pro traders. They get 4-hour and daily outlooks. That's for weeks and months, believe it or not. So we're going to get rid of this one right here, right? We drew that one in. We're going to get rid of this one right here, right here. And we know a few things here, right? We know that we're coming up into some resistance up here, right? Right up in here. We know these sellers are up here. And we also know that, let's get rid of this. Is that something that I need to know? No, we don't need that. I think that's yeah. So up here, this is what I want to talk to you guys closely about this, okay? Is this when we break out of the stock market? Well, that's going to be the bragging rights, right? So this is our 4, our 5 for today only, okay? And the question becomes, do we actually break out here? I want you to know something, or I'll give you a couple points here. One, we successfully backtested the daily trigger. That was good to see. Did we? Yeah, we successfully backtested the daily trigger right here. I thought we did. I want to show you that right now. We came up, we successfully backtested the daily trigger. That's extremely bullish for a turnaround. Now, even if we break out, that daily trigger is going to come up. And there's a fair chance of us coming back down to meet up with this daily trigger to go higher, okay? We still left behind this gap down here. There's a gap in pre-market that we left behind, right? And these bears are going to make an attempt regardless to sell us down. You understand? They're going to try. No matter what, they're going to try to sell us here. So this is what I'm going to tell you. As we approach this high, there is no glory in being long here. There's no glory. If they sell you down for a back test to go higher, you lose. If you come up here and we consolidate and then drop before going higher, you lose. If you come up here and we trade higher, blast through, right, and we're going to go higher, it's better to become a buyer here than it is for this risk right here. We could even just start rolling right now. And the reason I say that to you is because there's like a meat of the trade, right? There's fear at the bottom. There's the meat of the trade, and then there's risk at the top. That's the FOMO part of a trade. If you look statistically at when you're a winner, it's the meat of the trade in the middle. You're people that are just getting pulled up at when it feels right. They're normally losers. They get washed from the stock market. You never see them again. You spend enough years in the stock market and you start to see 10, 20, 30% of people just gone, disappear. Gone. They're just always FOMO buyers. So what's better here is this. I want to show you this really quickly here. Now that we're up here, right? What you're looking for, let me show you this over here. If you want to be a good bull, right? You begin to take some off as we approach. You let this happen, right? And you let this hourly trigger help you. Hourly trigger is where? Whoop, whoop, whoop. Yeah, hourly trigger comes up, daily trigger comes up, and you're like, hey, I'm a buyer over here. Support. And we beat this high right here, which is important. And we're on our way to exit and up and out. These places here are extremely fucking dangerous. You can leave a little bit on if you want. And what I want to say to you is that the expectations for tomorrow, from me at least, pivots traditional. From me at least, here's my expectations for tomorrow. Okay. We're not going to break out tomorrow. We're going to go right there. We're going to go right back down here, right? Where's that gap? Right there. And then we're going to escape. And I want to show you this right here. Right there. Okay. Right there. Real buyers, FOMOers, real buyers. Do you see it? Now, I might be wrong here, right? We go up here, blast up, come back down, then whoop, see daisy, right back up. So for me, at least, once we get up in here, no more risk. Don't want to deal with that. Don't want to deal with the selling down here. I want to be a buyer right there, okay? 83, 85, somewhere in there for tomorrow. I want you to see that, okay? And I'll draw this for you if you want for the badass extension, right? You get this high up here. If you want to say, yeah, Cap, we're still going to get that high tick on some good reports, right? So you get the actual high ticky into tomorrow. All right, you erase this. You get this high over here to prove that you're bullish. And we're down here. If you're a bull, you're somewhere down in here for right now, okay? You'll also note that the daily trigger is right here, right? Whoop, right? Starts to come up, comes back down, comes back down. Hourly trigger is right here. Whoop, right? And we're trying to be buyers down here. We catch a nice little wick, right? So there you go. This is expectations from here on out. They are preliminary. It does matter what happens end of day. Can you guys see that? Snap that. Take that home with you. Post it on your wall. Make sense? One more down. If I get left behind up here, that's okay. We go up here, right? Start to consolidate. Hourly trigger starts making its way up. Daily trigger starts turning up. and we're hitting it right here. We're going to leave the gap behind. No problem. I'll jump in there and take the trade. Okay? So just a note there. We'll play this as it pulls down. Do I think that we're going to do something excuse me, like this, like that, like this, into OPEX? I don't know. OPEX is on Friday. We have expiration as well. It's very well possible that I'm wrong, and we go straight up into Friday. Straight up. And we actually return to the scene of the crime from December 18th, right here. 6:04 and change. That is possible that I'm wrong. We go up here, right? Do Thursday, come back down, and then boom, Friday, 4 p.m. We're right back, scene of the crime. Okay? But for right now, being a conservative bull, right down there. Okay? Looking to buy a dip down here. Let's go to a 1 minute basis. Note that we just had a high tick just below 594 at 593.94. I'm going to bring back yeah, there's a pivot up here. R3 is right here. Or R4, excuse me. R3 down here. Bring that one up, I guess, right there. I agree, Jimmy. Retail sales is usually a bear trade, right? Bear data trade. Retail sales is pretty like bears love that shit. If you like, sometimes retail sales will go bull's way, one to 3 times out of 10. 7 out of 10 times that retail sales shit is a bear trade. It's bear bread and butter. Bear bread and butter trade. I don't think it can go either way. I've traded retail sales a bunch of times. It's statistically, it's a bear trade. If you check every retail sales, it's like 7 out of 10 times the fucking bear trade. It's like a bear fucking special. It's like NFP and unemployment numbers. Stay the fuck out of the market. Fed Beige Book. I didn't read this to you earlier, but I'm going to read it to you now. It's from 2 p.m. Fed Beige Book. More contacts were optimistic about the outlook for 2025 than were pessimistic about it, though contacts in several districts expressed concerns that changes in immigration and tariff policy could negatively affect the economy. I talked to you earlier today about both immigration and tariff policies, and I agree with both of those statements. Unless we get unless we get concentration camps in every fucking city, and the tariff thing, there's a gray area, right? Everything looks good. Economic activity increased slightly to moderately across 12 Federal Reserve districts in late November and December. We also have this report was prepared. This report was prepared on or before January 6th, and thus before the wildfires in the greater Los Angeles area started. Prices increased modestly overall, with growth rates ranging from flat to moderate. Employment ticked up on balance. 6 areas saw no change. Prices increased modestly overall. Wage growth picked up. All healthy, good things to be seeing. If you see inflation rising, yet wages keep up, that's the eye of the needle trade for running a hot market before things get nasty. What else do we have here? I think that's it. I think that's all I've got going into tomorrow. I think that's it. I don't know what else I could say here for tomorrow. Is there anything else that I'm missing? Maybe. I do want to say a few things to you, if I can. If I don't see you tomorrow, or no, we got 2 more days ahead. Maybe I'll start this conversation with you here. If you're a Democrat out there, be careful trading emotionally the next 2 days and into Monday. This is for half America, right? This is going to be a joyous weekend. Don't cloud your judgment trading with that kind of stuff. There's a lot of news. There's a lot of news that I'm seeing on Reddit in particular that are not accurate. They're emotional type shit that I'm and you could be swayed by some of these this information you're being fed. That would impact the market in a negative way. Be very careful consuming that shit and saying, yeah, everything's going to burn. They're saying this and that and all these other crazy things. So sit in the perspective of someone that wants to see Trump as president through the inauguration and their excitement in the market. Now, saying all of that, I do want to say one last thing here. I'm going to re-emphasize what Jedi Marcus said this morning. I don't know if anything bad's going to happen at that inauguration. I don't think anything will happen, but if there was a contentious election, this is one of them. They're very rare when we have when we have elections like this that are that contentious. So he mentioned buying some very cheap puts over the weekend. I might wait. If you guys are wanting puts though, for if you like some shit puts for Monday on a high, either today or close of Friday, right, on OPEX. We got Vixpiration on Friday, right? Vixpiration, right? So tomorrow's Thursday, day before Vixpiration. Vixpiration loves to get crazy. So, you got Vixpiration Friday, inauguration Sunday. If you're long the market too, if you're just long the market now, you own the market, it would still be prudent. If the market goes up, nothing happens. Trump's happy. Nothing happens at the inauguration. He doesn't say anything crazy. Market moons. Your portfolio is going to be great, right? So you can throw on hedging puts, right? They're dirt cheap, pennies, 2, 3 cents, 4 cents, 5 cents. This might not be for all of you, but if you own the market, hedge yourself either today at the close or on Friday close. You don't want to wake up on Monday, Tuesday morning and something horrible happened and, fucking market's on fucking full on fire. If they burn, nobody cares. SPY will be up. Everybody will be happy. Everybody's going to be pumped up. Trump's the new president, and your stonk is higher, right? But just some prudence there. So there's two sides of prudence to this talk, right? First talk is don't cloud your judgment with bullshit like Hedgeworth sucks and all this stuff, or I don't know, we're going to round up all the illegals, all that kind of nonsense. Stay away from that shit. There's half the country is going to be celebrating this weekend. So don't let that cloud your judgment as a trader. And then if you are along the market, hedge yourself appropriately for these type of events when they're hotly contested or people are emotional, I guess. Get it? I'm long here. I'm long. I've got calls, spreads for tomorrow, for Friday, for OPEX. I've had them on for a long time. I need to be above like 602 though. They're gonna go to fucking zero unless I get up there. So I'll make like 20 cents in a few things, but most of my like straight calls are way higher. Like there were 05s, 10s, 25s. I got spreads that are wide from 6,000 to like 610, 620, shit like that. I think they're gonna burn. I think they're gonna wait for them to burn and then they're gonna start ramping us afterwards. They're gonna murder every motherfucker. shouldn't swear. They're gonna murder every motherfucker that was long that last week of December. Right to the fucking bell at 4 p.m. And then they're gonna super ramp, in my view. The ascension of Donald Maximus, the first to the throne, will be a special day indeed. The OPEX wildfire of 2025. I always like seeing OPEX on OPEX on because we have Vixpiration the same fucking day. And you know it's going to get crazy, right? Either tomorrow's going to get crazy or Friday, Monday is going to get fucking bananas. Garrett, I guarantee it. Well, every once in a while, Vixpiration will pass with not too many fireworks, but I expect some fucking volatility the next 3 days. Well, for two reasons, Vixpiration and then the sell on the 18th. Both of those are both reasons, even though they attempt to park the bus on OPEX. Zeros and fives, baby. I haven't had a fucking whiskey. I haven't had a fucking whiskey since before New Year's. Day is today. Can I have one whiskey? It's halfway through the fucking month. I want a fucking bourbon. God damn it. I'm on this fucking cleanse. Can I just have like one fucking bourbon? I haven't had a fucking drink in 2 goddamn weeks. God damn, I need to get drunk. Yeah, I haven't drank anything. I've been like trying to be clean. My wife has been fucking with me. I posted on Twitter this morning, I'm like, okay, I'm not going to drink. No gummies. Eat clean food, salad, steak, chicken, clean, right? She was like, oh, I went and got boiled bagels for you this morning and I toasted one up with some chive cream cheese and some butter. I'm like, what did you do? Well, it's a fucking $4,000 or 4,000 calorie breakfast and it's all carbs. I love you, honey. I think they do that shit intentionally. I do. I think that she doesn't do that shit when I'm not fasting or whatever. I'm not even fasting, but just like trying to cleanse my ass. They're not fucking nice. I'm serious. She's like, yeah, we're going to make him fat and kill him young. Take his life insurance policy. Your dad is trying to live longer. We need to murder him. Die, daddy, die. You did your job. You made us. We don't need you anymore. It's Amazon women. I'm fucking telling you. My wife, dude, I don't do any guys with wives out there. My wife is like, you should take better care of yourself. Start taking better care of myself. We should fill you with lots of fucking junk food now. I'm serious. Like, I don't know what it is. And like my old age, she didn't do that when I was younger. Only that I'm getting older. She does that shit to me. Yeah. I remember that, Portland J. I remember that. I remember you saying that. Yeah, nothing for me either. I got banged up during the holiday. I got fucked up my legs. Not fucked up, but I was physically hurt myself, and then I got physically hurt, and then it was like just the year culmination. I'm like, I gotta fucking dry myself out from all the pollution. Like I went through like Thanksgiving, Christmas was like run. New Year's run. It was like literally run here, run there. Take care of things I need to take care of, family, friends. Then try to go to like, hey, let's take care of myself, which of course is run. No time to myself, zero. And no wind down, no decompress, no nothing. And meanwhile, I'm like I'm going to I went to this one Christmas dinner buffet thing. It was just like fucking like fat, carbohydrates, sugar, fat. All meals are like huge. I love home cooking, man. I fucking hate like the whole restaurant thing. Like, what do you have on the menu? We got New York strip burgers. I'm like, you got anything else? No, that's what we sell here. Or pizza or wings or some shit. Like, it's always like that same garbage. Or some consternation of that same garbage. And the size and portions are fucking huge. Then you try to get a salad, and it's like it's got everything, and it's got as many calories as a fucking meal. I feel or as bloated, or slightly under as bloated, even at a like a salad at a restaurant. It's just like too much. Nice, mofo of Mexico. Yeah. I'm not. It becomes not, and I don't eat fast food either. Like, I don't eat that shit. Even nice restaurant, I'm just like, I'm like, no, too much. So, I wanted to air myself out this month, but I want a glass of bourbon so fucking bad today. It just hit me. I'm like, I need a fucking bourbon. I need to take the edge off. I need to be more disciplined. Pain lets you know you're still alive, right? Plenty of time for that long dirt nap once you're dead. I don't think so. I think we squeeze here. I think we're going to squeeze up after the bell. I think everybody's buying puts. They're going to squeeze this fucker. Yeah, that's what I think is going to happen. Waiting to see what happens there. I'm gonna squeeze. We know we ain't the only people that know that the sellers are right here. So, they're right here. So we know that they're here. So they're already buying puts. The logic here is, it's not rocket science, right? This is the sell place. End of day. Buy puts. Buy puts. I'm assuming that's what people are doing. So there's probably a squeeze in here. Dealers will erase those puts hopefully here to the close. Make you buy them again at 4:15. Yeah. 100% I'm with you. I'm getting old. They're gonna try to murder him before they print. If we're gonna go down, they're probably gonna try to murder him. Nothing's easy, right? You're gonna take it if you take acid to watch the stock market show. Let me know. I've never traded on shrooms, but I have eaten shrooms. Trading on mushrooms, I've never done that. I wouldn't even try. I'm trying to think if I could trade on mushrooms. I don't know if I could. I eat. I'll take mushrooms every once in a great while. Marijuana candies, I'll eat those, but I can't trade on those either. I have friends that are on marijuana all the time. I don't get high or anything. But if I like eat like a marijuana gummy, it's got to be like 2 days off, 3 days off. And I'll eat like one and then dry out the next day. I'm not good with marijuana. Or like, I don't smoke marijuana at all. I will eat gummies every once in a while. If I'm on like vacation and shit, it's legal where I live. So I will eat a gummy, but not like a day before. I can drink and go to do the show the next day. I feel clean and good. Marijuana gummies? Fuck no. I feel that shit for like 2 days, or I feel it the day that I do it, and the next morning into afternoon, I still feel not right. Yeah, I know people that do that do very well on marijuana. I understand that. I get it. I can't. I can't. I make poor decisions. Poorer than sober. I've never been a drug user, so when I do drugs, I'm kind of I'm kind of regarded. I don't need a lot. I'm a cheap date. It's just paper. You can talk about acid. It's just paper, bro. Don't do shrooms, do paper. Yeah, I got a close friend of mine. It's like a famous, like, not, he's kind of famous. He's been smoking weed his whole life. He's like an editor for climbing magazine. He's like famous climber and shit. He's like lifelong friend of mine. He's been smoking weed since like day one. I don't know how he does it. Oh, you think paper made you not an alcoholic? I had a moments in my life where I did some like intensive therapy, and I took Molly and mushrooms, and that helped me. Helped me through depression. Helped me through. It gave me very clear.
Until we get the imbalance.
Well, it did two things for me. It helped me to know who I loved, like my wife, kids, all that kind of stuff. That's the Molly helped me with. Reconnect with my wife and stuff. And then the mushrooms helped me with clarity on what I wanted in life. It was just like, I know everything here. I know the exact path that I want. And it was awesome when I did that stuff. More drug users than non-users. I think there's a lot of marijuana users out there. There's like this, and even the profession. Like if you feel like Wall Street's like what they all eat. They just eat fucking. I used to do that. I did it briefly when I was younger in my profession. But like Adderall is huge. Cocaine is huge, right? You can't say cocaine's not huge on Wall Street. It's fucking massive. Adderall is probably not even considered a drug on Wall Street, is it? Those guys are working, what, 80-hour weeks? Regularly. Can't fucking tell me they're not fucking on Adderall. They can get fucked. They go to a doctor and they get it prescribed legally. I worked at a company where the company had a preferred doctor to prescribe it to you. Like, yeah, you're going to go see this doctor right here. Hardly touch now. I never smoked weed. I was in the army, so I fucking couldn't. I couldn't do drugs. So I would get tested. So I was in the army for fucking years. I was in the reserves for a long time after. So I never could do drugs. So I never got into it. I shouldn't say mostly because of the army, but it just never wasn't a part of my regular thing. Yeah, you smoke joints while you trade. I can see people trading while smoking weed too. I can understand that. Still grinding down into the close here on the 5-minute trigger. See if they squeeze us up into the bell here. And I will see you guys tomorrow. I appreciate you showing up today. We will, tomorrow in particular, I will look at what the reports are in the next 4 weeks. We'll start looking at the big tech reports. If you're a pro trader, I will have out for you a couple things. I have the 2025 projections are being edited. I still have some charts I need to put on there. I'm going to be giving you outlooks for all the big Mag 7 shit for a year out. And for the earnings coming up, we will take a look tomorrow or Friday stream. We're going to start taking an outlook on all of earnings. So like, what does Tesla look like? What does AMD look like? What does Google look like? Microsoft, Apple, all these other stock or tickers, so that you can be prepared for the next couple weeks for earnings. So if you want to show up next couple days, we'll, instead of me ranting about the market and macro bullshit and data bullshit and the election, that shit's done. I think we've gone through all of it. So we're going to transition now into focusing on earnings. If you guys have your own insights on earnings, you're like, hey, I've got this favorite ticker, it's been selling down and we're just waiting for this earnings, all that kind of stuff. We're going to take a look at some of our index tickers, because some of those look like they want to turn up for earnings and for 2025. We'll weave in this like 2025 trade, spec growth. It looks like it wants to turn up for 2025, stuff like that, American Airlines stuff. So and that, I think we'll spend the ranting part of the next 2 days on that. And we'll talk about my plan, because I'm going to start dispensing money here. I'm going to start like buying 100 packs of American Airlines and SPOOs and Qs, and I'm going to explain my positioning for the year. Personally, I think I'm going to be long owning a lot of shit into the end of the year, and try to muscle through any volatility that might present itself, unlike the last 2 years, and focus a lot on stock buying, maybe selling some options and stuff. So a little bit of a transition here this year in my approach to the market. And I don't know if I get caught in the market this year or not. It should make for a good story, right? If I get caught, I'll be bag holding SPY for 4 or 5 years or something crazy like that. I don't think so though. There's two paths this year for the stock market, and we're not showing those lower numbers yet. So unless we show those lower numbers, I have a target end of year for 720 on the high side. 720 end of year. Yeah, dude, serve like I looked at with Joe Harper last night. I fucking looked at our tickers for the year. They went stupid. Some of them are squeezing right now. They're like squeezing balls off right now. Balls. We've got multiple. I mean, like I want to say 40 to 60% are at like 300 to 600. No, I'd say 600%. Last 2 years, like 30-40% of our basket. Another 30-40% up 300%. Maybe 20% no performance, no buys either. Just couldn't find a buy. Another 10% maybe losers. It's been a very good fucking 2 years. Generally speaking. An outstanding 2 years. It's been very, very, very good. As a matter of fact, my losers are mostly recommended stocks from other people. Biggest losers this year or last 2 years. Not really recommendations, but more like this stock's getting fucked. We should buy it. Rumors, that kind of shit. Probably the worst picks I've had. SPY week here into the bell. Week down into 592.97. Traders coming in and hedging tomorrow's retail sales. Also hedging the fuckery that comes with Vixpiration. Normally, if you don't know, Vixpiration's on Friday. Normally, the day before Vixpiration, we can get some real violence in the market. So be careful. Yeah. I'm welcome. That's all still my decision to do that shit. So I only blame myself. I can't blame other people. That's all my own decision making. I want to. I can't. It's like the worst thing to do is blame other people. I used to do that shit. Well, I did years ago. I used to blame people. I used to hold grudges and shit. One day I'm going to get that motherfucker back. I used to do that. Guilty. Never again. That shit would eat me up. Bear plane forming above here on the 1 and 5 minute. Watch this to see if any changes happen in the bell. If you're just joining us, possibly going to want to be a buyer right down in here. That's where I want to be a buyer, right there. Still a little bit of room here. It's overnight. If you're a futures trader, Globex trader, you're going to try to take this and then take this down. It's a big question. Globex looks like it will has some room to run to the upside. Though I will say we're in positive gamma, so there's no reason why dealers will be buying futures. So I guess you're going to need some reports to give you the boost either in the overnight or in the morning. How far into we're not that deep inside of the gamma flip right now. Dealers are kind of neutral right now. They're not really buyers or sellers. There's no like defense. Like right now, its price is so close. 59.50 flips at 59.35. It could be trading sideways until morning. Leave that off here. Last minute. All right. I'll see you guys tomorrow, 9:30 in the morning. We're here Monday through Friday, most days of the year. We just came into a new year. I'll check you guys out. If you're new to the show, check us out, tradethetrigger.com. We got a great little Discord community. It's fucking awesome in there. We got some real great traders with great insights and great data. And I'll see all of you guys tomorrow, 9:30.